Good morning and welcome to the third annual Wisconsin Rural Economic Summit. My name is Brandon Hofstad and I'm the Community Economic Development Program Manager with the University of Wisconsin-Madison Division of Extension. It is my pleasure to open this summit and welcome hundreds of participants from across the state of Wisconsin and the country. Today's summit is focused on rural Wisconsin and is meant to examine the state's diverse rural places. Using the latest research and data, we will focus on Wisconsin's rural economy. The summit includes an overview of the latest economic and demographic trends across the state of Wisconsin, an examination of labor force trends, an examination of entrepreneurship, and a discussion of stories of rural success. We will wrap up the summit with a keynote presentation of what rural communities can do to foster economic growth and development. And we are excited that you're able to join us for these conversations. Before we begin, I would like to thank our event sponsors, including the Wisconsin Economic Development Corporation, Office of Rural Prosperity, Wisconsin Rural Partners, Rural Wisconsin Health Cooperative, the Institute for Business and Entrepreneurship, and the University of Wisconsin-Madison's Division of Extension's EDA University Center, Community Economic Development Program, and Local Government Education Program. And a special thank you to the U.S. Economic Development Administration. Today's meeting was made possible in part by a grant from the U.S. EDA in support of the EDA University Center at the University of Wisconsin-Madison. And before we turn it over to our presenters, a few housekeeping items. Today's meeting is being recorded and the final video, all PowerPoint presentations and resources will be provided on our website. You will receive a follow-up email following today's event with this information. Also, we were using the meeting format, which means that you'll be able to see all other participants, but we will be spotlighting folks so you can be able to find them easily and they will show up on your screen. Today, if you do need closed captioning, you can find that at the bottom of your screen. At the tabs, there is the CC and just click that and you'll enable it. And as a friendly reminder, please be sure to mute your microphones when you're not speaking. We will have opportunity for question and answer, but due to the size of the audience today, please put your questions in the chat and we will try to get to them when we have opportunity. If you don't feel comfortable putting a public one out, you can also send one again to myself, Brandon Hofstad, or my colleague, Kristen Runge. You can find us at the top of your list. With that, I would like to now turn it over to the Associate Dean of Extension at UW-Madison, Dr. Patrick Robinson, who will offer a brief welcome and introductory remarks. Patrick, the floor is yours.
Thank you, Brandon. Good morning, everyone. It's a pleasure to be joining you all virtually today. I also want to sincerely thank all the sponsors and organizers for this tremendous opportunity for shared learning and dialogue about Wisconsin's rural economy. The fact that this event is virtual and free to the public means we are maximizing access to the information, which is fantastic. I've actually lived my whole life in rural Wisconsin, and that was a decision that I made intentionally. I was raised in Kewaunee County and lived there until this day. Fun fact, in winter, I can actually see the house that I grew up in from my current house when the leaves are all down. I grew up in that rural community doing all the things that children of my generation did, working on neighboring farms, attending a small rural school, and engaging in rural activities. Some of you may appreciate this. Those activities included super fun things like picking stones, baling hay, and milking cows for $2 a day. When I was growing up, we would make trips to the what we thought was the huge metropolis of Green Bay. Those were very rare, but we treated them as special opportunities to experience things like the delicacy of McDonald's, which was a really big deal for us growing up. And it's also true that clearly many things have changed for these rural communities over time, but there also is much that hasn't. So I share all of this just as a means of emphasizing my own appreciation for the rural communities of this state. A large expanse of Wisconsin is dotted with rural communities that are vital to the overall economic engine of the state. In addition, many Wisconsinites choose to live in these communities for reasons that might best fall into the bin of quality of life. So either overtly or implicitly, quality of life is connected to our rural economies, and a conference like this and the work it represents is vital to supporting that overall fabric of rural Wisconsin. I'm also excited to share some information about a new opportunity in Wisconsin for rural communities. The University of Wisconsin-Madison is establishing the Institute for Rural Partnerships to support community-based projects and create new partnerships to better meet the needs of rural communities. UW-Madison is one of 3 institutions, along with Auburn University and the University of Vermont, to receive funding to establish the Institute for Rural Partnerships, which The research, outreach, and partnership development will address unique challenges facing rural communities. The funding comes from the 2022 Agriculture Appropriations Bill, which was led by Senator Tammy Baldwin and then included in the bipartisan fiscal year 2022 omnibus legislation. Through that project, the College of Agricultural and Life Sciences and Extension are working closely with partners to explore new solutions to challenges Wisconsin's rural communities are facing. We're excited to enhance our work with rural communities across Wisconsin, and we have approximately $5 million to invest into research and related outreach that addresses challenges identified by our rural partners. That work is just getting off the ground, and we are very excited by the additional opportunities it represents. I'd like to close by reemphasizing my appreciation to everyone who has helped bring us this event, and thank all of you for your shared passion for Wisconsin's rural communities. Welcome to the 2023 Summit. Back to you, Brandon.
Great, thank you, Patrick. All right, so I'd like to introduce our first speaker, Dr. Steve Deller. Steve is a professor of agricultural and applied economics at the University of Wisconsin-Madison, and sorry, maybe this went blank. And a community economic development specialist with Extension. Steve's work focuses on modeling community and regional economies to better understand the changing dynamics of the economy, assess the impacts of those changes, and identify local economic strengths, weaknesses, opportunities, and threats. Today, Steve will start our summit off with a discussion of the state of the rural Wisconsin economy. Steve, the floor is yours.
Good morning. Thank you, Brandon, and thank you, Patrick, for the introduction to the summit. When we go around Wisconsin and work with rural communities, and even some more urban communities, there's a series of issues that are being discussed almost uniformly across the state. And these should not be unfamiliar to you. Broadband is at the top of the issue. Before COVID, a lot of rural communities kind of thought as broadband as kind of a luxury, not a necessity. But COVID really kind of opened up people's eyes to, having access to quality and affordable broadband is necessary. Housing, quality and affordability, labor issues, labor shortages, childcare availability and affordability. A lot of communities came to housing and childcare issues through their concerns about labor shortages. Communities were asking the questions, we're generating good paying jobs, why aren't people moving into the community to take them? And they came to issues like housing and childcare. Other issues that are also there, but not quite as prominent, is gaps in access to healthcare, particularly EMS services, which for rural areas is often volunteer-based, and we're simply don't see the rates of volunteerism that we used to, and mental health issues, particularly coming out of COVID. Mental health issues related to our youth is really becoming very a prominent issue. The other is the lack of a robust K-12 educational system. This is partially the limits on the ability of communities to invest in K-12 education because of the property tax levy limits. We need to go to referendum, and that's fine. But we're seeing a pattern here is that wealthier communities tend to pass these referendums at a much higher rate than poorer communities. And what this does is that this creates a kind of a widening gap between the wealthier communities investing in schools and the poorer communities that are kind of lagging behind. These are some of the broad issues. But what I want to do is I want to talk about what's kind of happening to the rural Wisconsin economy in fairly broad terms. And in order to do this, we need some kind of definition of what we mean by rural. For this particular presentation, I'm going to be using the Office of Management and Budget's definition of metropolitan, non-metropolitan, based off of the 2010 census. The 2020 update redefinition isn't available yet, so this is reflecting 2010. You'll notice that, there's large parts of Wisconsin that are classified as metropolitan, which makes a lot of sense. Dane County, Milwaukee, the area around Milwaukee, up to the Fox River Valley area. But there's a couple of places that kind of maybe don't seem to make a lot of sense here. For example, in Dane County, if you go to the immediate west, is Iowa County. To the immediate south is Greene County. Both of those counties, if you drive through them, you kind of say, this is a pretty rural county. But because of commuting patterns, they're actually classified as metropolitan. So for this analysis, you see kind of the breakout. Okay. If we look at population growth, and what I've got here is a population growth index that goes all the way back to 1969, kind of give us this historical context. And what we're looking at is U.S. metropolitan areas, U.S. non-metropolitan areas, Wisconsin metro, and then Wisconsin non-metro. And you can see that the U.S. metro area, that's the dark blue line, is growing very, very rapidly over the entire time period. If you look at Wisconsin, you can actually see that there was a period in the 1990s up until the Great Recession that rural Wisconsin and metropolitan Wisconsin was doing very well, thank you very much. And then the Great Recession hit. And rural Wisconsin has really not fully recovered from that. Starting at about 2017, you can start to see rural Wisconsin start to pick up just a little bit. But we're still kind of lagging that growth that we experienced in the 1990s and up to the Great Recession. That kind of strong growth that we were seeing has kind of tampered. Okay, if we look at employment growth, you can see that actually Wisconsin was doing quite well, thank you very much, up until we hit the Great Recession. You can see non-metropolitan Wisconsin actually kind of recovering. You can see the impact of COVID, but look at rural Wisconsin. Rural Wisconsin, the red line is simply not, has not recovered coming out of the Great Recession. And then you see COVID and then the bounce back after COVID. But compared to the rest of rural US, rural Wisconsin seems to be doing okay. Okay. One of the things, and Matt in his discussion about the labor force is going to get into this in a little bit more detail, but this is a simple indicator. It's called the population employment ratio. And it's simply taking the total population and dividing it by the total number of jobs. And we track it over time. And one of the things I hope you notice here is that it's been declining consistently over the last 50 plus years, 60 years. Essentially what this is saying is that we're generating more jobs than people to fill those jobs. This is essentially a structural issue that's occurring not just in Wisconsin, rural Wisconsin, or even metropolitan Wisconsin, but it's across the country. Now, through the 1970s and the 1980s and into the 1990s, we were able to sustain that because women started entering the labor force in significant numbers. There was a pool of labor that we could tap into. The issue, though, is that over the last 20 years or so, women's labor force participation rate has pretty much stabilized. There isn't that pool of labor sitting on the sidelines that we can tap into. So the problem that we've got is that we have more jobs than we have people to fill those jobs. And it's not a temporary, it's not a COVID related. Coming out of COVID has kind of shined a spotlight on it, but this is a structural issue. Now, what are the policy options? Well, one is, we could increase the birth rate. I'm not sure how we're going to do that. The second is that a lot of businesses are moving towards automation. When you go to the grocery store and you see the self-checkout lines, the grocery stores are not doing that to make your shopping experience better. They're doing it because they can't find the workers. So businesses are shifting to automation, okay? The third thing is we have to talk about immigration policy. This is a structural issue that we cannot ignore any longer. The problem, though, is because it's such a politically charged issue, we can't seem to have an honest conversation about it. But it's something that we need to be talking about. And Matt's going to talk about this a little bit more. Okay. Now, job growth. where are jobs coming from? One of the things that Tessa and Tessa's going to be talking about this in more detail, is looking at jobs growth, job sources. Job growth can come from two places. One is existing businesses or new business formation. Well, existing businesses can kind of, maintain the status quo, not really hire anybody, not really laying anybody off. Existing businesses can be hiring people, they can be laying people off, and they can also be closing and shutting down. So when you look at that net effect on existing businesses, which is the blue line for non-metropolitan Wisconsin, consistently almost every year, except for two, 1978 and a little blip there, 1984, existing businesses in Wisconsin shed more jobs than they added. All of the job growth in Wisconsin has been coming from new business formation. I shouldn't say that. There are existing businesses that are adding, but when you look at the net, it's new business formation. Okay, so that entrepreneurship is really important to job growth. Now, the problem, though, is that when you look at establishment business growth, okay, it's been fairly stable. You can see the recession of the early 1980s, but it's been fairly stable throughout the, most of the 80s, the 90s, and up to the Great Recession, and then it plummeted. Okay, and it hasn't fully recovered. Okay. Now, non-metropolitan Wisconsin is doing a little bit better than the rest of the non-metropolitan US, but this tick down post the Great Recession and then not coming back is a cause for concern. Now, Tessa has some new evidence that's suggesting that coming out of COVID, this trend might be changing, which is really, really important. Okay. Another way of looking at rural Wisconsin is to look at per capita income. This is simply nominal per capita income, nominal. I'm not taking out the effects of inflation. And you can see here that, there's fairly stable growth, but notice that rural Wisconsin is consistently below metropolitan and non-metropolitan areas, but it is consistently higher than the rest of rural US. Okay. Also notice the last couple of years, there's a pretty strong uptick there. Okay. That's partially a reflection of the stimulus coming out of the federal government in terms of COVID, those stimulus checks that people were getting. That's partially explaining that. This is also partially a reflection of the labor shortages. Businesses are having to bid up wages in order to attract and retain workers. Now, that bidding up of wages is good because it increases income, but that's also a source of fueling the current inflation that we're experiencing. Another way of looking at this is to simply compare per capita income to a national average. So what I've done here is I've simply taken the local per capita income and divided by the national average. So if you're above 1, that means you're higher than the national average. If you're below 1, that means you're below the national average. Notice that for most US metropolitan areas, it's consistently above the national average. Wisconsin metropolitan area tends to be above the national average. A couple of periods it's dropped down. Notice in the last few years, it's dropped down below. So non-metropolitan or metropolitan per capita income in Wisconsin is growing, but it's not growing as fast as the rest of the US. Now, notice non-metropolitan Wisconsin, that's the red line. It has consistently bumped between 80 and 85% of the national average. But also notice that rural Wisconsin is doing better than the rest of rural America. Okay, so rural Wisconsin is actually kind of not doing so bad here, but notice the last couple of years, it's been trending down. Yes, it's growing, but it's not growing as fast as the national average. Okay. Now, where does income come from? Where do people get their income? Most people think that income, household income or family income comes from work. That's not necessarily true. If you look at per capita net earnings, that's about between 50 and 60% of total per capita income. Okay. And that's particularly true for non-metropolitan Wisconsin. Okay. So about 55% thereabout of income comes from work. There are other sources of income. Per per capita current transfer payments. That's largely Social Security. And notice how non-metropolitan Wisconsin is actually a little bit more dependent on things like Social Security. It's because rural Wisconsin tends to be older. There tends to be more retirees in rural areas. Dividends per capita, dividends, interest and rent income, retirement income. Notice that non-metropolitan Wisconsin per capita retirement income is a little bit higher. Again, that's because we have more retirees living in rural Wisconsin. But the point here is that per capita income tends to be lower in non-metropolitan Wisconsin compared to urban Wisconsin, and that's consistent across the board. But when we think about income growth, we need to think, yes, jobs are important, but there are many other sources of income that we need to be thinking about. Now, what about poverty rates? If you look at overall family poverty rate,
Steve, you muted.
yeah, I just unmuted myself. Sorry about that. Is that the average poverty rate for families in Wisconsin is about 7% for non-metropolitan. It's a little bit higher than 5% for metro. But when you start looking at the different components here, it's really kind of families with children tend to have a much higher poverty rate than families that are kind of empty nesters, if you will. The other one that jumps out here is look at home ownership. Home occupied, the poverty rate tends to be pretty low, but renters, the poverty rate is very high. When we've been working with rural communities, looking at housing issues, and we talk about housing stress from a physical perspective, it's really the rental market where a lot of that stress is occurring. The thing is that for a lot of rural Wisconsin communities, when you talk about housing, they're thinking that, you know, that Cape Cod house on a quarter-acre lot surrounded by a white picket fence, okay? That's not where the stress is occurring. The stress is occurring in the rental markets, okay? Now, what about work-related, okay? The poverty rates for folks that are working, particularly folks that are working year-round, tends to be lower, okay, across the board. But what I find to be particularly interesting is that, you know, how many workers do you have in the household? One worker households, the poverty rates tend to be much higher than if you have two or more workers in the household. Now, I think this is important because when you go back to childcare, what we're finding in a lot of rural areas, a lot of rural communities and urban areas, is that the lack of childcare is essentially limiting the ability to have two workers in the household. Because of the lack of childcare, a lot of families and households are forced to being single income households, which means that the poverty rate is going to drive up. So the lack of childcare is not just a labor force issue from a business perspective, but it also is having a dramatic impact on the families themselves in terms of their income generating potential. Now, one thing that is being discussed a lot now is whether or not a college education is worth it. And the current discussion is that the cost of higher education has been going up, student debt is going up, and given the labor shortage right now, there's a lot of employment opportunities. That may be true in the short term, but over the long term, the returns to higher education is extremely high. The long-term income between someone with a college degree and someone with just a high school degree could be up to $1 million over their lifetime. So while this question about the value of a college education may make sense in a very short time framework, it does not make sense in a long-term framework. Okay. Now, one of the things I want to close up with here is kind of looking at some of the key industries for rural Wisconsin. One of the ways that we do this is that we kind of look at this thing called a location quotient. It's basically an indicator of how important is this particular industry to the local economy, and then how is this changing over time. There's four possibilities here. One is that this industry is a strength for us and it's growing. It's becoming more important. Is this a potential economic cluster? The second is that it's a strength, but it's declining. Is this a potential threat? Another is that, well, historically, this is a weakness, but it's growing in importance. Is this an opportunity? Is this an industry that we want to pay some attention to? And then there's a fourth category. This has never really been a strength for us, and it's been declining. And what I want to do is I want to kind of take a snapshot of what non-metropolitan Wisconsin looks like. And what we have here is kind of looking from 2010 to 2020. Now, we have to take this analysis with a bit of a grain of salt because 2020 is COVID, but unfortunately, I don't have more current data. So I'll go through this fairly quickly. The size of the bubble is the percent of employment that is within that sector for non-metropolitan Wisconsin. So a couple of industries that pop out is manufacturing. It's a strength. It's getting stronger, and it's a fairly important in terms of employment. Finance and insurance is popping out. Management of companies up in the corner there. That's a unique category, and I debated about even including it or not. Those are basically holding companies. Okay, to get up, kind of blow into that center block there, I kind of took the manufacturing and took it out. I also took that management of companies and took it out to get a better feel here. And there's a couple of sectors here that are kind of jumping out. Look at state and local government. That's not necessarily strength, but look at the size of that bubble. There's a lot of employment in that sector. Construction is actually getting more important. Healthcare and social services, right in the center there. I want to focus on those three that were, also look at transportation and warehousing. It's a strength, but it's declining. I think that's a reflection of COVID and how the supply chain kind of got all messed up during COVID. Accommodation and food services, it's a strength. That's purely a reflection of COVID. So I'm going to discount that. Okay. But look at manufacturing employment. This is from 1978 up to 2020. This is looking at non-metropolitan Wisconsin and compared to the rest of the U.S. non-metropolitan areas. Notice that this is not a growth industry. From 1978 to 2020, employment in non-metropolitan manufacturing is only 15% higher than it was back in 1978. Indeed, for the rest of rural U.S., it's actually declined. The second thing, also notice how it's kind of unstable here. You can really see the recessions popping out. Now, the question is that if rural Wisconsin is really heavily dependent upon manufacturing, and it's not a growth sector for employment, and it tends to be unstable, is manufacturing a strength or is it a threat? I don't have an answer to that. I'm simply raising the question. If you look at the healthcare sector, from 1978 up to 2020, for non-metropolitan Wisconsin, employment in this sector grew by 121%. Okay, it's been strong growth. Also notice there's no indication of recessions here. The healthcare sector is an extremely stable sector. Now notice that over, since the end of the Great Recession, it's kind of plateaued. There's not a whole lot of growth there. Is that because we have a labor shortage and we can't attract workers to work in these sectors? Or is it because a lot of the growth that's occurring is occurring not in non-metropolitan Wisconsin, but occurring in metropolitan Wisconsin? Notice the low drop off there because of COVID. That's essentially all hands around deck to deal with COVID. And a lot of non-COVID related activity was basically shut down. Okay, so elective surgeries, for example, were shut down. So that's a COVID related phenomenon right there. The other is state and local government, is that from 1978 to 2020, employment in state and local government grew by about 57%. There was strong growth in the 1990s up to the Great Recession, then it plateaued. There hasn't been a lot of growth there. There hasn't been a lot of growth, I think, because of the property tax levy limits. But when you go into a lot of rural communities, the single biggest employer oftentimes is the local school system. So when we talk about, for rural Wisconsin, when we talk about public finance related issues like school aids or revenue sharing or the property tax levy limit, those discussions have a direct influence on economic activity within those communities. Okay, that's something that tends to be pushed to the side and we tend to forget about. So I'll stop with that and we'll stop sharing and believe it is on to Matt.
Yes, thank you, Steve. Up next is Matt Curis. Matt is a community economic development specialist with UW-Madison Division of Extension. Matt has extensive experience working with communities and organizations across the state in areas of regional economic analysis, labor force research, socioeconomic impact analysis, and industry sector competitiveness. Today, Matt will discuss rural Wisconsin labor markets. Matt, the floor is yours.
Great, thank you so much. Can everyone see my slides okay?
We can.
Okay, excellent, thank you. Well, good morning, everyone. Thank you all for being here. I'm going to jump right in and I'm going to build on a number of the topics that Steve talked about related to labor availability in the state of Wisconsin, as well as some trends we're seeing in terms of commuting patterns and remote work. So just to kind of echo what Steve talked about in terms of metro versus non-metro definition or rural versus urban, I'm using a similar definition that Steve used in looking at metro versus non-metro counties. I am actually using the 2020 definitions, so they're slightly different than what Steve is using. And what you see there on the screen are non-metro counties in kind of that tan color, as well as what we call micropolitan areas, which are in the gray. So when I talk about non-metro Wisconsin in the presentation today, I will be discussing that grouping of counties. So let's jump right in and look at unemployment rates. And here we're going back to January 1990 up to the most current data we have for January 2023. And here we're grouping metro counties, non-metro counties, and comparing them to the overall state national trends we're seeing over this period. A couple things you'll notice here is that if we look at where non-metro and metro counties are relative to the United States, for the most part, Wisconsin's metro counties have been below the national average in terms of unemployment. You see non-metro counties kind of bouncing around a little bit above and below, depending upon the seasonality. But for the most part now, especially since the pandemic hit, we see both metro and non-metro counties being below the national average. We also see that historically, we are at some of the lowest unemployment rates that we've seen across the state of Wisconsin in both our metro and non-metro counties. And if we dive in a little bit more and look at current unemployment rates in all of our non-metro counties, we can see that for the most part, our non-metro counties are below the national average. That orange line you see there, dark orange line. We do have a couple counties that tend to be a bit above the national average, but we do see those that are significantly below the national average as well. And for the most part, when we compare the unemployment rates in January 2023 to those in January 2020, so before the start of the pandemic, we see for the most part in non-metro counties, they are lower. And this is kind of surprising when we look at a couple other numbers, for instance. We would expect a large number of job openings is what we're seeing with low unemployment rates. And we can see how job openings in the state of Wisconsin have grown dramatically really since the end of the Great Recession. But we also see that giant spike with the onset of the pandemic as well. And they continue to be quite high. And that does make sense with our unemployment rate. We have very low unemployment. We should have a large number of job openings. And in fact, when we combine those two numbers at the state level, we can look at the number of unemployed individuals per job opening, and we see that there's 0.38, which means there's more than 2 job openings for every unemployed individual in the state of Wisconsin. That is a historic low. And we can see that even before the pandemic hit, we had very low rates here as well. So again, kind of echoing on some of the things that Steve talked about, this is not something that's necessarily sprung from the pandemic. This is a structural issue where we simply have more jobs than people. And if we look at how unemployment rates, or excuse me, how employment has changed by county going back to the third quarter of 2018 compared to the most recent data we have for the third quarter of 2022, we can look at the state of Wisconsin as a whole. For the most part, we've seen employment declines. We have not come back to kind of those pre-pandemic levels in most counties. We do see a couple places in red where we do see growth in employment. But again, very few counties in the state have gone back to pre-pandemic levels, and most of those tend to be metropolitan counties. And again, this may not make a lot of sense given the trends we've seen before. We would be expecting to be creating a lot of jobs given the low unemployment rates we have. And if we dive in a little bit closer and look at just non-metro counties, we can kind of see the pattern that we saw on the map before, that for the most part, employment in non-metro counties has yet to come back to pre-pandemic levels. We see a handful of non-metro counties, Dunn, Walworth, Jefferson, Iron, that are a bit above, but those have not come back to the US growth rate. And this is very similar to the chart that Steve showed, just to echo the fact that while we haven't come back to pre-pandemic levels, we also haven't come back to pre-Great Recession levels. So I'm not going to spend a lot of time on this, but that is an important structural issue. We simply are not creating as many jobs in our non-metropolitan areas as we were prior to the Great Recession. Now, if we have a very low unemployment rate and we're not creating a lot of jobs, that must speak to something else that's going on in the labor market. And what's happening is that we're seeing our change in the number of individuals that are in the labor force, as well as the participation rate of those individuals. So here we're looking at participation rates for the state of Wisconsin compared to the United States, going back to 1976. And what you'll see here is that for the most part, we have been significantly above participation rates compared to the nation. That said, we kind of see that bubble that Steve talked a little bit about as well, where we saw rising participation rates throughout the 80s and 90s, and then declining participation rates throughout the 2000s, 2010s, and up to the most recent data we have. We can see that now as a state for age 16 and over, we have a lower participation rate than we did back in 1976. And if we break this down, looking at Wisconsin counties, both metro, non-metro, and compare these participation rate changes over time, we can see a fairly similar trend to what we see for the state average. We see declining participation rates prior to the Great Recession, after the Great Recession, and up to the most recent data we have before and after the pandemic. We do see declining rates in metro and non-metro counties alike, but we do see the rates have declined a little bit more in non-metro counties compared to their metro peers. And if we compare these rates across the time periods on the previous chart for the state average, they do track fairly closely to what we're seeing at the state level. Now, what we do know is that different components of the labor force have different influences on how this overall participation rate have changed over time. We know that participation rates among different age groups tend to be different. We see the highest participation rates among individuals aged 25 to 54, what's known as the prime working age population. We see high rates of individuals 20 to 24. We see high rates for the most part for individuals 55 to 64. But then we also see very low rates for individuals of retirement age 65 and over. We can also see that these rates have changed a bit over time. We see that some age groups have actually increased over time, while others have declined somewhat. And if we look at metro versus non-metro counties, or excuse me, if we look at metro counties over time, we can see a very similar trend here as well. We can see higher rates among prime age men and women. We can also see lower rates among individuals age 65 and older. And we can also see how these rates have changed a little bit over time. Now, some of those changes might not look very big, but they are statistically significant from time period to time period. We also know that the share of individuals in these different age groups are also changing. So if we look at the share of population age 16 and over in metro versus non-metro counties and how they've changed over time, we can see that the share of individuals of prime working age or age 25 to 54 have gone down. We've also seen increasing shares in both metro and non-metro areas of age 55 to 64, and significant changes, especially in age 65 or older in non-metro counties. So when we think about how these participation rates have changed, as well as how our age structure of the labor force has changed as well, we can think about what their impacts are on the overall change in participation rates for age 16 and over. So what we're doing here is decomposing the influence of changing population within different age groups, as well as changing rates of participation within these age groups as well. And overall, non-metro counties had a decline of 3.6% in the participation rate from 2010 to 2021. We can see that the vast majority of this influence came from declining population shares of prime working age men and women. They had a distinct impact on the overall participation rate. We also see that age 55 to 64 and 65 and over actually boosted the participation rate over this period. So they actually had a positive impact. Now, that said, we do see declining participation rates among prime age men and women also having an impact, a negative impact specifically on the overall participation rate for non-metro counties. But the big takeaway here is that participation rates are certainly influencing what we're seeing, but the bigger impact is coming from our changing population and age structure. And if we compare these changes over time for prime working age individuals, both men and women, metro versus non-metro, United States versus Wisconsin, we can see that the changing share of the population of prime working age men and women are having the biggest impacts overall on participation rates across the board. Now, that said, in non-metro Wisconsin, we're seeing the biggest impacts from those declining shares. We're also seeing the biggest impacts on declining participation rates among prime age men and women in non-metro Wisconsin counties compared to these other places on the state. So again, that is something to keep in mind, but the bigger takeaway, I think, is the changing age structure of our population. Now, that said, if we're thinking about how we're going to increase participation rates among prime working age men and women, there are some explanations that we need to consider why we're seeing these changes. Thinking about how the Great Recession impacted labor availability and job availability, a lot of individuals were unemployed for a long time and they have gaps in their employment record and they're just having a hard time finding a job. Automation, Steve talked a little bit about. Globalization, so shifting of different sectors to different parts of the globe. Reservation wages, a number of individuals that may have been laid off in the Great Recession cannot simply get the same wage that they had prior to the Great Recession, so they had a hard time coming back into the labor force. Mismatch of skills or education. Disability, including substance dependency, is a big issue we're seeing in a lot of rural Wisconsin counties, as well as rural areas nationally. Benefit cliffs, gender norms. Gender norms is a big one in a lot of counties that had manufacturing dependency, whereas after the Great Recession, we didn't have as many jobs in the manufacturing sector as we had before, and a lot of the men that were traditionally employed in this sector couldn't find jobs that maybe catered traditionally to males, and then justice system involvement as well. Now, that said, when we think about prime working age population in Wisconsin rural counties, for men, for the most part, they're above the national average. We do see a number of counties that are below the national average. Some of those are home to correctional institutions, which depress their employment a little bit. But again, we do have a strong work ethic in our prime working age men in many Wisconsin counties. And just from a national perspective, we see that if we look at the share of individuals of prime working age men that are in the labor force, we see across the state of Wisconsin, as well as the upper Midwest, very high shares compared to other regions of the United States. For women, a very similar pattern. Again, for the most part, Wisconsin's non-metro counties have a very high participation rate for prime working age females, most of them above the national average. And a similar picture here, very high shares of prime working age females in the labor force compared to many other regions across the United States. So I think this speaks to a lot of the challenges that we're facing in terms of attracting individuals to our non-metro areas as a source of labor, because we do have very high participation rates for the most part compared to other places. So if we're thinking about how we're going to address some of these labor force issues, we can certainly try and increase participation rates in some areas, but a lot of it will be other strategies as well, including how do we attract new individuals to our communities. And I think one of the emerging factors that a lot of non-metro counties are thinking about is there an opportunity to attract individuals that may be able to work from home now. And if we look at the change in share of individuals that were working from home, going back to the 2012-2016 period, up through the 2017 to 2021 period, we can see that in non-metro counties, a large share of them had a big shift in the share of individuals that are working from home. So this isn't a great comparison in terms of the time periods we're using here, because we just have 2017 to 2021. So we're not really capturing the full impacts of the pandemic here, but nonetheless, we are seeing changes in the share of individuals that are working from home. And if we look at, excuse me, how this has changed across the United States, here we're just looking at the counties that had a statistically significant change in the share of individuals working from home over these two periods. And you see across the state of Wisconsin, in particular, many non-metro counties, we see that there was a statistically significant increase in the share of individuals working from home. And compared to many other non-metro regions across the United States, we are a bit unique in the fact that we did have a growing share of individuals working from home. And I think one of the questions that many non-metro counties have in particular is, what does this mean for potential population growth? And this is something that Steve and I are starting to take a look at a little bit more. The challenge is we don't have great data yet to really do a lot of modeling on this, but we have started looking at some trends and what they might mean moving forward. So what we see here is net domestic migration rate by county from 2018 to 2019. The darker the red, the higher the positive net migration rate, the darker the blue, the greater the domestic population lost through migration. So here we have a picture prior to the start of the pandemic. And here we have a picture from 2020 to 2021. We do see quite a few non-metro counties that went from negative net migration to positive net migration. We also see a number of counties that had positive net migration. Their rates increased even more so after the onset of the pandemic. So we just want a simple scatter plot in terms of the percent of employees primarily working from home in 2021 versus the 2020 to 2021 net migration rate. There is a fairly strong correlation in terms of the share of individuals working from home as well as net migration rate over this period. This doesn't mean that one caused the other, but it is something that I think we should keep in the back of our minds as we're doing research going forward in terms of what working from home might mean for population change in our non-metro counties. That said, when we think about the future of working from home, there is a very strong correlation between the share of individuals that are working from home and the types of jobs that individuals work in. And the reality is that some industry sectors have a very high share of jobs that can be done from home, seen here on the chart: educational services, professional, technical, scientific services, information, and so on and so forth. While other industries have a very low share of jobs that can be done from home. So industries like manufacturing, transportation, construction, agriculture, and so on and so forth. So the question is, for a lot of Wisconsin communities, non-metro communities specifically, will this influence the commuting patterns that we're seeing now? Well, and the reality is that many non-metro counties have a low share of jobs that actually could be done from home. If we look at the Wisconsin average, it's about 35.1%. Most of our non-metro counties are below that state average, and in some instances, quite a bit below. So the reality is that many Wisconsin industries that are located in non-metro areas will still depend upon people physically being located in their facilities, which also means that they will likely depend upon people commuting from one county to another to fill those jobs. With that, I'm going to stop sharing and turn it back to Brandon. Thank you all for your time.
Thank you, Matt. Next up is Dr. Tessa Conroy. Dr. Conroy is an economic development specialist and associate professor at the University of Wisconsin-Madison. Tessa studies community economic growth and development, small business dynamics, and entrepreneurship, and will discuss the state of rural entrepreneurship in Wisconsin.
Thanks, Brandon. Good morning, everybody. So I have rural Wisconsin entrepreneurship for you here this morning. So I want to start with what I think is a pretty dramatic graph. So this is showing us that entrepreneurial intent is high. Relative to pre-pandemic levels, we saw a lot of entrepreneurial activity beginning in the summer of 2020. So what we're looking at here are monthly business applications for Wisconsin. So if you aren't familiar, a business application is kind of like getting a social security number for your business. You're going to get an employer identification number, and that number is going to be important. It will be essential, I should say, for filing payroll taxes when you hire your first employees, but you might find that you also need it for setting up a business bank account, going through any sort of like regulatory or certification processes. That number might also be relevant. So while we know it's essential for businesses that are going to have employees, we would expect this to capture a breadth of businesses, even those that don't have employees. So we were at about 3,000 per month before the pandemic, and then with the pandemic, we saw about between 5,000 and 6,000 each month. So to give you a sense of the scale, we've had 170,000 business applications since March of 2020. And some of those might have happened anyway, but we could think of this as having about 50,000 extra business applications during the pandemic. So lots of entrepreneurial activity. The reason I say that this is entrepreneurial intent is because it is an early stage indicator of entrepreneurial activity. This would be something that we would expect an entrepreneur, a new business owner, to do fairly early on in the process before they've hired employees, for example. And we see this increase in rural and urban Wisconsin. So I won't dive again into the definition of urban versus rural, but I'm using that same definition that Steve started out with. This comes from the Office of Management and Budget. I'm using urban interchangeably with metro and rural interchangeably with non-metro here. So what we see is that this increase is happening in across the rural urban continuum. So what we have here is about a 39% increase in entrepreneurial activity from 2019 in rural Wisconsin, compared to about a 51% increase in urban Wisconsin. So pretty dramatic, again, across the rural urban continuum. It is leveling off though. So we saw a big increase in 2020, and then in some instances, another big increase in 2022, and then it seems to have leveled off. In fact, in several states, it's actually declined just a little bit, but is still high relative to pre-pandemic terms. So we had growth in 2020, growth in 2021, and then in most places that we look in 2022, we saw little change from the previous year. So it's staying elevated, but the growth that we saw in the previous year seems to have tapered off. So I'm showing you Michigan and Minnesota just to give you a sense of what's happening in neighboring states. I also think it's interesting to note when we look at this sort of annual growth that in some places the big jump was right away in 2020, and in other places the bigger jump was in 2021. And that's what we see in rural Wisconsin. So compared to urban Wisconsin, so I'm looking at the far right side of my graph here. Rural Wisconsin, the big jump actually wasn't in 2020, and that's a little bit unique. The bigger jump was in 2021 compared to urban Wisconsin. We had relatively comparable increases in both years. And I don't know if we have an answer as to what that is. It might just be maybe a more cautious group of entrepreneurs. It could have to do with how the pandemic affected that particular community, any particular mandates or policies in those regions, as well as the industrial composition. I expect all of these factors would play into kind of when the entrepreneurial incentive structure shifted such that more people hit that tipping point where they're pursuing the venture. So here we have a state level map of that increase in business applications. So we're looking at 2019 to 2021. When we take that county level average, so this is a little different than summing across all rural and all urban areas and then taking an increase. When we look county by county, we see a 43% increase in business applications in our urban counties and 39% in rural. So this, to me is a pretty comparable story in terms of what's happening to entrepreneurship. This is definitely a statewide story and not just concentrated in one particular geography. So what does this ultimately mean for our economies and in particular our rural economies? So these data that I'm showing you now aren't available for rural specifically. So we have to think about what's happening statewide. But this is showing us that of these business applications, how many are actually going to go on to form fully fledged businesses? How many are going to actually hire employees? So that's really important. The way this is tracked is we're going to look at how many people applied for that EIN, how many people filed that business application, and then how many within 2 years actually hired employees. And we're going to call that a fully formed business. And what you see here is that prior to the pandemic, we had about 400 businesses, or between 300 and 400 businesses entering into the economy every month. Based on projections, so based on what we would expect, we should see between 400 and 500 now in the pandemic. So potentially thousands of businesses entering during this time of sort of economic volatility. We had a short recession and then things came back, and now we're back talking about a labor shortage again. But all of that aside, we have more new business entry. These are businesses with employees than we've seen since the data, since going back to the Great Recession in 2010. So we do expect this to have meaningful consequences for the business community based on what we know. I would say these are projections though, because we want to give these businesses those 2 full years to actually hire their employees and be counted in this fully formed category. What's interesting, though, is that the rate of formation is declining. So yes, we had all of this entrepreneurial activity in terms of business applications happening in 2020, 2021, 2022, but the rate at which those businesses are converting into those fully formed businesses has declined. So first, I want you to note that actually relatively few businesses are going to convert. So on the right-hand axis is the conversion rate. So going back historically, kind of Great Recession era, we would expect between maybe 12 and 14% of those businesses to actually convert and hire employees. And that's kind of ticked downward. Of course, there's a lot of fluctuation, but now we're closer to 8 to 10% of businesses that are actually converting. So a lot more activity, but a lower conversion rate. On net, we're going to still end up with more fully formed businesses than we would have pre-pandemic. But I think this declining rate of formation is really important. I think that for those of us in the economic development space, this is a point of conversation and an opportunity in terms of what can we do to help more businesses convert and become fully formed. But I also think what's going on here is that we have a lot of businesses that are operating, but they're not hiring employees, so they're not getting counted. So hiring employees is just this particular way of counting a fully formed business, if you will. But a business could still be fully formed without employees. We could have a lot of kind of one woman, one man shops. We could have partnerships that are operating without employees. And these non-employer businesses, we might also call them solopreneurs, or we might call them micro businesses, are, I would argue, a really large and increasingly important part of the business community. So this declining rate might just be that we're not counting all of the businesses that are forming because we're excluding those non-employer businesses. And I'll show you why I think that's important. So some of our applicants, my point from the slide before, some of our applicants are going to operate as non-employer businesses and they're not getting counted in that formation rate. Non-employers, though, are the majority of businesses in the Wisconsin economy, in the national economy, in the rural versus urban economy. So in Wisconsin, as of 2019, this is the most recent data available, 72%, so almost 3/4 of businesses are non-employers. So again, these one-man, one-woman shops, the partnerships that don't have paid employees, these are non-employers, and these are dominating in number the business community. They tend to be smaller, of course, in terms of employment because they don't have any, and smaller in terms of sales as well. But I think it's really important to note that these businesses are important because we expect about 17% of the US labor force is earning some income from a non-employer business. So this could be their primary form of employment. So this could be their main job, but this could also be supplemental or secondary employment for a lot of people. So 17% of people in this non-employer space earning some income from these businesses. So I think that's really important to know. I would argue it's even more important in rural economies. So now I'm looking at the graph on the right. So this is showing you the growth of these two categories, employer versus non-employer businesses, since 1999 to 2019. And we see that employer businesses have had relatively modest growth compared to the non-employer businesses. So in urban areas, non-employer business growth far outpaces employer business growth. But more importantly for our conversation today, in rural areas, non-employer businesses are actually the only source of growth in that 20-year period. We actually had a net decline in employer businesses. And so those non-employer businesses are the growth edge, the only growth edge in rural communities on net. So I think that's really important to kind of understand what the profile is of our rural business community. It's going to be majority non-employers. That's where the growth is happening. And then thinking about what that might mean for economic development for our programming. These businesses might be harder to see, more likely to be online or home-based, more likely women-owned or owned by people of color. And so that has implications for how we do economic development. Many of these new businesses are also likely to be online. So we don't have localized data for the sector, but if we can imagine that Wisconsin is going to follow national trends, I think we can get some insights here. So on the left, we're looking at business applications by sector. And we see that retail trade really dominated the activity, followed closely by professional, scientific, and technical occupations, and then services. And that other services category is kind of a catch-all, I'll admit, has everything from like machinery repair to barbers to dating services. It's sort of interesting to note like what's happening in that sector. But if we look at that largest sector of retail trade, and break it down, that's what I'm doing on the right. So let's take retail trade and unpack it and look at where the activity is happening. And you see that it's by and large non-store retailers, and that's sort of coded language for online sales. So a lot of these businesses are online. So in rural communities, what that means is that if you are thinking about broadband, and I think a lot of places are, this is all the more reason to be moving on broadband and thinking about your online capacity. So we have some research findings suggesting that broadband does have a positive impact on startup activity. So just one more sort of bullet point on the list of reasons why broadband might be important for economic development. The effect is even larger in remote rural communities. So if we think about our remote categories, I think both Matt and Steve showed you that we actually have kind of a 9-category continuum. If we think about those categories, those last 3 categories that are the most remote rural, the effect is even larger. And the strongest effects for women-owned businesses. And so I think this, and those smallest businesses, those micro non-employer businesses. So when we think about equitably enhancing entrepreneurial activity in rural areas, I think broadband is a great complement to understanding that segment of entrepreneurial activity. So does this mean anything? So as I started off by saying this is an indicator of entrepreneurial intent. So did the pandemic start to wane, and a lot of the policies that we were seeing and the employment changes that we were seeing during the pandemic, as those relaxed and sort of faded away, did people sort of abandon whatever entrepreneurial ambitions they had and just go back to what they were doing before? I think that's a really valid question, and we don't know the answer yet. So maybe. So what I'm showing you here is self-employment in the 9th district state. So this is some work that I did for the 9th district of the Federal Reserve. So that's why I'm using 9th district states. And I have to use a big pool because these data aren't great at the state level. I need a really big sample to know that these are going to be representative. And what we see is that self-employment is relatively stable. There's not an obvious increase. And I've broken this out by incorporated versus unincorporated. So incorporated are generally considered maybe the more sophisticated, the more formalized, they have higher growth potential relative to the unincorporated, which generally have a more modest growth trajectory. We might think of these as more likely to be necessity-based entrepreneurs versus incorporated being more opportunity-based entrepreneurs. And we just don't see a dramatic increase. And that was surprising to me. We have all of these people intending to become entrepreneurs. After some amount of time, shouldn't we see an increase in self-employment? And what I find is we don't yet. The level of self-employment is relatively unchanged. I will say there is some other research out there that shows that self-employment has increased. They're measuring it a little bit differently than I am. So I expect that there's some sort of sensitivity in terms of thinking about the type of entrepreneur and how we go about counting who's an entrepreneur and who's not. That matters here. And one of the ways that that might matter is by thinking about that incorporated versus unincorporated share of entrepreneurs or self-employed people. This I do find showing up in a number of places, this increase in incorporated self-employed people. So we're seeing a compositional shift away from that unincorporated category towards the more formal, the higher growth performance incorporated businesses. So I think a potential explanation here is that people are entrepreneurial more or less to the same extent that they always have been, but what the pandemic did was incentivize them to get an business application submitted. So we sort of got to look under the hood about who's thinking about entrepreneurship, even if that's not going to materialize. We have this insight now about who has ideas and who's thinking about it. And it's a really pretty big share of the population, I would argue, even if ultimately they're going into employment. So I think in terms of potential entrepreneurs, we got a sense of what's happening there. I also think it incentivizes people to formalize. So we're seeing more people pursuing that kind of higher level of sophistication, going the formal route, pursuing something with a little bit more growth potential. And so I think that's at least one of the takeaways here is that even if we don't see an overall increase in self-employment, I think the type of entrepreneur that we're seeing has shifted due to the pandemic. So just to summarize the key points here, in Wisconsin, business applications reached the highest level on record during the pandemic. Entrepreneurial intent is high, but only a small share of businesses actually form. And by form, I mean hire employees. So only about 8 to 10% of those business applications will actually result in a fully formed business. But that's to say, though, we want to note that this rise in business applications is likely to result in more non-employer businesses, which aren't getting counted than non-employer businesses than employer businesses. And I think that's important for us when we're thinking about our rural business community and who's a part of that. I just have a minute or two for what I think this means for strategies. I mentioned broadband already, so investment in broadband adoption infrastructure. These are going to be really important as many new businesses are in online retail. So that's one way we might think about supporting these new businesses. Training, especially for online marketing, retail platforms, shipping and logistics. We sort of changed the way we do some things during the pandemic and making sure people have the tools necessary to be successful. Financing programs that reduce barriers to capital for small businesses. So a lot of these types of loans are going to need small amounts of money. So think about loans of $100,000 or less, or even in these kind of smallest categories, under $25,000. Anecdotal evidence and conversations with entrepreneurs tells me that these types of loans are really hard to get, particularly as community banks go away, when we lose revolving loan funds. These are really important. So thinking about the rural landscape of financing, what are credit unions, what are banks, what are community groups, what grant availability do we have? These are going to be really important for those very small types of businesses that have trouble getting access to financing. Network development, peer-to-peer learning programs. These are a really important way that entrepreneurs can support each other, and they can do that online as well. So kind of how do we integrate these entrepreneurs that might be kind of on the business community periphery? How do we bring them into the center and make them part of the conversation and make sure they're at the table? Childcare. Entrepreneurs need a lot of the same things everybody else needs. They need broadband, they need a supportive community, they need childcare. So even for entrepreneurs who want to grow their business, that's going to be hard to do when juggling the responsibility of childcare if you don't have reliable, accessible, affordable childcare. So then the last thing is programs tailored specifically to sole proprietors who have no employees. Many new entrepreneurs are going to fall into these categories. So thinking about the particular needs, perhaps in terms of training, what does it mean to exist as a legal entity in this category? What does that mean for taxation, for regulation, and helping entrepreneurs specifically in this category tackle some of those questions, I think are all opportunities for making the most of these non-employer businesses. And the thought I'll leave you with is that these businesses, even though small, are the seed bed for those employer businesses. And so I think we want to be paying attention. And with that, I will say thank you for your time, and I'm looking forward to the rest of today. So thank you.
Thank you very much, Tessa. And I think we are up next. We have a wonderful panel put together today to talk about rural opportunities and rural success stories. I want to start by introducing everybody on the panel. We have Beth Haskovic, the Director of Office of Rural Prosperity for WEDC, who is with us. Marie Berry, the Director of Community Economic Development from Rural Wisconsin Health Cooperative, and Melissa Meschke, the Economic Development Outreach Manager for the Institute of Business and Entrepreneurship. And just to go back and give you a brief overview of how lucky we are to have partners like this in our state to help us. Beth, as you know, is the Director of the Office of Rural Prosperity, which was established in 2020 as one of the outcomes of the Governor's Blue Ribbon Commission on Rural Prosperity. Beth comes to WEDC from LISC, one of the nation's largest CDFIs, where she oversaw strategies and programs related to access to capital for small businesses across rural America, Puerto Rico, and the U.S. Virgin Islands. She brings a wealth of expertise and experience to the team in commercial real estate development, commercial corridor development, small business capital, entrepreneurship, and initiatives at the intersection of arts, culture, and economic development. Marie Berry, who is with Rural Wisconsin Health Cooperative, is their Director of Community Economic Development, is leading the efforts to utilize Wisconsin's hospitals as a driver of economic development. And if you live in a rural community and you're lucky enough to have a hospital, you know exactly how important they are to our rural communities. Marie previously worked for 2 senators in the Wisconsin legislature and successfully shepherded bipartisan bills from drafting to being signed into law. Marie thinks that, I love this on your profile on LinkedIn, you think that rural communities are among America's best kept secrets, and you're honored to spend time in both for work and play. I think you have 300 people who agree with you on this Zoom today. And Melissa Meschke, who is the Economic Development Director for the Institute of Business and Entrepreneurship. She serves as the Outreach Manager. She works with ESOs and EDOs to expand knowledge and access of the great resources for entrepreneurs across our state. She discusses capacity building with the groups that she works with, especially in rural areas, in addition to marketing strategies to reach and assist entrepreneurs and work to improve business retention and expansion. So I'm very excited to have you working here in the state, all 3 of our panelists, and very thankful that you're willing to talk with us today. Prior to today's panel, I sent the panelists 3 questions. We'll go over each one of these, and then we'll have about 10 minutes at the end to have some open discussion. We'll discuss as panelists, but also please use the chat to drop in the questions you have, because we want to hear your ideas and we want to be sure we're answering all of your questions. So first question, and Beth, I'll ask you to answer this first, and then Marie and Melissa. Wisconsin has some fantastic rural success stories. Would you mind sharing a rural success story from your organization or an organization with which you partner?
Thanks, Kristen. We're just so honored to be part of the panel today. Lori has some slides that I'm going to pull up real quick.
Fantastic. Thank you, Beth. Marie.
There we go. Excellent. Yeah, so the success story that I am going to share with you all this morning is from one of our communities in southwestern Wisconsin, and it's called Growing Lancaster. So Grant Regional Health Center, which is the hospital in Lancaster, Wisconsin, in partnership with a large manufacturer in their town and a growing group of other partners now, has stood up this effort to make their community more inclusive and welcoming. And this kind of stemmed out of conversations from local business leaders, including the hospital and the manufacturing company, about how they were told repeatedly that their community was not seen as a welcoming place for new residents and immigrants alike. And as we talked about earlier this morning, much of what success in the future in rural communities is going to look like is being able to welcome new residents. So they started thinking about how their community could change this perception and trajectory and what they could do to kind of build infrastructure within their community to support new residents. So the group started off pretty small and has grown since then and has been able to include members of the local government, other individuals within the healthcare sector, representatives from the school district, representatives from the economic development field, both at the local and state level, and the Community Action Agency, as long as some other partners who are more just individual members of the community. And so they've taken a multi-pronged approach to making their community more welcoming. They've looked internally at their own businesses and how navigable they are for individuals who potentially don't speak English as their first language or are immigrants into the community. They've also looked externally at how other businesses in the community are able to be accessed by immigrants into the community. So they've done a lot of Spanish language training in their community. They've held a cultural event to both expose their current residents to some of the cultural traditions and norms of immigrants into the community, as well as to create recreational opportunities for immigrants in their community. They held a focus group of immigrants to hear directly from them about what was challenging, what worked well, what they needed more help with to help them target some of their future efforts. Some of their goals for the upcoming year include starting an English as a second language class in their community, which is something that they don't currently have, and creating a banking access guide to allow individuals to start bank accounts and gain access to capital within their communities. So overall, the effort kind of just started as a conversation between a couple business leaders and has now become really widespread throughout the community, with the Chamber of Commerce participating, participation from the ag sector, making sure that their hospital is able to serve individuals who are immigrants into their community. And I think overall, it's just a really great example of thinking outside the box. I think we often don't necessarily think about immigrant inclusion as an economic development activity, but when we look at some of the demographic shifts that are happening in our rural communities, it's not unique to Lancaster. We hear this from our hospitals often, that they are seeing growth in immigrant populations and want to ensure that they're able to serve them and support them and really integrate them into their community and make them feel welcome. So that was one of the success stories I wanted to share today.
Oh, that's fantastic. And we just heard a few slides ago about the importance of immigrants in growing our rural population and meeting our workforce needs. That's fantastic. Melissa.
Yeah, the example I wanted to give today actually focuses around ARPA funds. For any communities that still have ARPA funds available, I wanted to throw out this example as something you might be able to pursue. I started working with the Wapaka County Economic Development Corporation, as well as the Wapaka County Veteran Service Coordinator Office and the Small Business Development Center at UW-Stevens Point on an initiative to help veteran entrepreneurs in Wapaka County. We don't know the exact number. That's a hard demographic to narrow in on, but we have found that there are plenty there now that we started doing work. So what we ended up doing was making an allocation request from Wapaka County for ARPA funds to fund an educational program partnered with grant funds for veteran entrepreneurs. So this allocation that was requested over the next 1.5 years, give or take, will service up to 28 veteran entrepreneurs in Wapaka County. Through the program, they'll receive access to a veteran-only cohort of our entrepreneurial training program at the SBDC. Once they complete that program, they will receive a $5,000 grant to go towards their newer existing business. It was a great example of collaboration across multiple levels of county organizations and really required a lot of effort and work to put that together, but the county was really excited about the opportunity. In addition, Wapaka County also added to the revolving loan fund, so there's even more fund opportunities there. But I wanted to highlight that as an opportunity with any counties or communities that have ARPA funds remaining, that there are some great opportunities put together for entrepreneurs.
Oh, that's wonderful. And a great way to connect with veterans. That's fantastic. So our second question, would you mind sharing some wisdom on factors that contributed to the success that you highlighted, or factors in general that you observed or your organization has experience with that are contributing to success in rural communities? And Marie, let's start with you and then go to Melissa and Beth.
Yeah, so this is probably stemming from the nature of my work, but I would say that one of the most important factors to support success in rural communities is engaging multi-sector partners in work to really make sure that it's kind of a whole of community effort rather than segmented. I think often in rural communities, people kind of lament on limited resources or limited capacity. And one of the best ways to overcome that is to ensure that you're bringing in partners from multiple sectors that can all work together to bring what they have to the table to help grow your capacity and grow the resources that you have to support whatever efforts are being incubated within your communities. And on that same vein, I think one thing that makes rural Wisconsin communities pretty unique that is not necessarily true in other states lucky to still have strong anchor institutions within rural communities. You know, we've seen very limited closures of rural hospitals. We still have local banks and credit unions. We often have school districts that are controlled locally and strong local governments. And all of those things really contribute to the strength of our rural communities. And when you look at other parts of the country, that's not always true. They've seen more consolidations, more closures. And so that strength of Wisconsin communities is really unique and something that we can leverage to help make projects more successful in rural communities. The other thing that I would plug is often rural communities, as we saw in some of our demographic data earlier today, are reliant on either migration or changes in some of their current residents to be successful in the future. So communities that are able to be welcoming and to think outside of the box and to accept new ideas and accept new people definitely have a leg up on other rural communities as new residents come in, or residents come in that maybe don't look like who's previously lived in communities. The more we're able to elevate their voices and integrate them into our efforts, the more successful rural areas are going to be in growing and remaining sustainable in the future.
Oh, I didn't know if you're gonna.
Oh, sorry. Yeah, I forgot to unmute. Beth or Melissa.
One of the biggest community challenges that I see in working in the rural counties and communities across the state is capacity. Often small budgets, small staffs, not a lot of capacity to service all of the needs of the counties. So I'm a big proponent of not recreating the wheel. So there was a question earlier in the chat about how do people find out about the resources. That's the work that I'm doing every single day. I'm setting up meetings with county and regional and local representatives to help them be aware of all the resources that are out there for entrepreneurs and connect them to those. So really thinking about all of the resources that exist and trying to avoid recreating the wheel, because rural communities, I haven't met a rural community yet that says, yes, I have enough money and I have enough staff to do all of the things that I want, so let's all work together, collaboration, co-opetition, whatever you want to call it, and really focus on building those communities through the resources that exist and making those accessible to everybody in the rural areas.
That's a great point. I like that term, collaboration. Or how did you say it again?
Co-opetition.
Co-opetition. Yeah, I'm going to use that. So I was going to focus on actually, Julie Lassa's in the chat taking some of my talking points. But I was going to focus a little bit on just a renewed understanding that focused investment in rural communities is needed. I think our office is evidence of that. The Rural Partners Network that was mentioned in the chat, and Julie shared the link to that. 5 communities in Wisconsin were selected for that opportunity to help provide staffing from the federal level and connection to federal resources to kind of untangle access to resources for rural communities, and to recognize that there are some barriers within the way state and federal programs are set up in terms of matching dollars that rural communities just don't have. And so trying to carve out some special money dedicated to rural communities that waive some of the traditional barriers that would allow communities to access those funds. At the top of today's call, the Institute for Rural Partnerships was mentioned. I think that that's another really important kind of statewide tool that will help bring more investment into rural communities and create more opportunity for cooperation. And then I think that there's just, so many dollars right now, it can be overwhelming. And so how do we help make it easier for people to understand? And again, I think that goes back to the bipartisan infrastructure law page on our website, and being able to provide support for grant writing and get folks trained on that process and what it means to be compliant to state and federal funds, so that they can really get some of those dollars into their communities and solve for issues that have been systemic in nature.
The ability to draw on somebody to help write grants is huge, is absolutely huge. Because as you said, Melissa, we don't have a single rural community that has an overabundance of staff looking for things to do. We're all at the wheel and all working pretty hard and maxed out at times. So our next question, our third question then is, people sometimes think that opportunity is only available in larger communities, or they associate large opportunities or great opportunities with metropolitan areas. I think those of us on the call know otherwise. Could you share your insight into some of the opportunities within rural communities right now, or maybe offer a prediction on where you think the competitive advantage is for rural communities now or into the future? And for that, let's start with Melissa and then Beth and then you, Marie.
So I actually thought this would be an interesting opportunity to highlight exporting in the state of Wisconsin. Exporting is available to a wide variety of businesses, whether it be services or products. A lot of people are accidental exporters. They don't really think about the sale that they made in Canada or the sale that they made in Mexico being a big deal, but it really can be a big deal. I grabbed some quick stats from exporting on Wisconsin. Wisconsin exports actually increased by 10.4% in 2022 and are up to $27 billion. So quite a lot of money coming and being exported from the state of Wisconsin. So lots of opportunities. Canada is our largest trade partner. 31.4% of our total trade goes to Canada. Mexico is a close second at 16.4%. So a lot of opportunities to export both products and services. And there's a lot of resources out there to help any business, no matter where they're located. A couple WEDC resources, including their trade ventures, as well as their export tech program, can provide funding and opportunities to actually meet the people that people might be able to export to. Internally at the Small Business Development Center, we have our Go Global Center. So we have technical assistance for anybody looking to explore exporting at no cost. So there are lots of opportunities, I think, for rural businesses to jump on the exporting train, and some already are probably doing it, whether they've thought about it or not. But there's a lot of money and resources available to make exporting a really big part of your rural business.
Fantastic, Beth.
Great. Thanks for the WEDC shout out too, Melissa. So I think I'd be remiss to not comment on Main Streets and entrepreneurship, given Tessa's presentation and all of the comments in the chat around the Main Street Bounce Back program and that infusion of capital into small businesses and rural communities and on Main Streets. And in particular, the connection to tourism and, really local culture and the importance of those types of businesses in drawing people to learn more about your community and what's special or unique about your rural community. When I think about Rhinelander, for example, I think of the Hodag and all the little shops and the creative energy around, graphic designers and makers creating their own unique spin on the Hodag. Or I think about Bayfield and the jewelry shop that creates jewelry out of natural materials from the landscape and sea glass from the Lake Superior, and how that makes a connection to place and why that's so important in rural communities across the state. So I think continued investment in our main streets and in small business, and that also gives some of that flexibility for folks that left the workforce because of childcare to kind of be able to set their own schedules and still make a living while addressing some of their childcare needs as well. And the other comment in the chat, and I think this was shown through some of Matt's data, is that infusion of folks through remote work in the northern part of the state, but also the connection to climate migration. I think it's definitely an opportunity. I think there are challenges that come with those opportunities that need to be mitigated. But another great example of that is Rhinelander. In one of my first weeks in this role, I went up and Katz had coordinated a creative economy tour in Rhinelander, and we talked about the fact that 600 new families had moved into the community during the pandemic, how that was influencing their school system, how that was influencing creative businesses. And so I think that's also a reality and kind of a projection of the impacts of the state on both small business, but also rural communities.
I think this is where panels can be so fun because we all three had very distinct answers and we didn't even coordinate that ahead of time. My response to this question was that rural communities who can kind of figure out how to maximize their quality of life are going to have a competitive advantage moving forward. We see this often with physician recruitment. Obviously, recruiting physicians to rural Wisconsin can be really challenging, and communities that are able to really sell what makes their community unique in terms of potentially outdoor recreation opportunities, or saying we have housing and we have childcare available. So this combination of knowing that your community has the basic infrastructure that's needed to bring people in, coupled with here's what makes us unique and here's like the kind of people that really love living here and how you might fit in, I feel like it's kind of this perfect combination of setting your community's competitive advantage. I would double down on childcare as well. I think almost all of the rural communities that I work with either have a coming childcare issue, have a current childcare task force, or are having serious conversations about how to handle that issue in their community. And especially when we talk about wanting to make sure that we're maximizing labor force participation and able to support new residents in our community, often I think rural communities have relied on more informal childcare arrangements, which are wonderful, but not necessarily adequate for newcomers to communities that don't have some of the social connections that people who've lived there for their whole life have. So yeah, that combination of ensuring you have housing and childcare to support new residents and are able to sell what's unique really to me speaks to how rural communities can position themselves competitively.
And that's great answers, great answers. 600 new families in Rhinelander. Wow, wow. And the need for childcare is so universal. I'm so glad that we're talking about this. 10 years ago, it's really didn't seem to be on anybody's radar. And so important that we talk about it now. So we're at the portion for the panel where we are going to open it up for questions. And we did have a couple in the chat. And I'll start with going back to the question about our northern counties and tourism. We had a question, kind of a two-part question. Beth, you touched on the climate change portion of it, or climate migration portion of it. When we're looking at our northern counties, which are substantially tourism dependent for a number of our communities there, what do you see as kind of the future, or what do you see as some competitive advantages or issues that we can do to maximize or address dependence on tourism or maximize tourism? And along with that, is there anything that we want to add to the discussion of climate migration and how communities can best take advantage of new residents?
I can jump in on the first part of that question. You know, I really appreciate the Office of Outdoor Recreation at Tourism. I think outdoor recreation is key. And it's also linked to climate change because the ability to outdoor recreate is shifting with climate change and where there is snow, and the ability to ski and snowmobile and the impacts of that. So I think that there is, you know, there needs to be a conversation about conservation and preservation and access, you know, to outdoor recreation activities. And I think that's also linked to the, you know, interest in remote work, as people want to be able to work and then go, you know, skiing at night or snowmobiling after work. And so I think that those are interwoven topics to me that are really connected and will impact tourism in the northern part of the state.
One sort of unique phenomenon that our hospitals have been seeing, especially those that are in areas of the state that are really heavy on the tourism economy, are the challenges in their housing market, where you're seeing more individuals interested in living in those communities, which is wonderful, but really ensuring that you still have a housing base that can support kind of your essential workers or the workforce that supports tourism based activities, including hospital workers, has been a huge challenge for some of those communities. So I would just plug that as an issue that many tourism-based communities are facing. So ensuring that they both can welcome new visitors and welcome new residents while ensuring that some of their housing market stays affordable for people who've been in the community and provide essential services to the community. Also, many of our hospitals are examining how they can lessen their kind of carbon footprint or impact with new builds. And we're seeing a proliferation of hospitals that are looking to install solar panels and partner with other organizations with more expertise to ensure that their facilities are basically prepared for climate change as it's occurring and are able to stay sustainable and resilient and provide high quality services in the future.
Two things I'll add from a small business development standpoint would be succession planning and resiliency planning. Seasonal businesses take a lot of planning to be successful. You have to really budget correctly. You have to think about your seasonality, your marketing, and all of that, and how that relates into the way your business functions and the way you can stay open when, you know, you might be closed extra long in a winter like this, where at the end of March here, we haven't even hit 60 degrees yet. So really thinking about resiliency planning and succession planning is really important too. Not that all businesses in the Northwoods are owned by older people, but there is an older population in the Northwoods. So when we think about businesses and succession planning, really making a thoughtful plan about what you want to do with your business and ultimately where you want it to go. We really don't want to see those businesses just closing, especially in those tourism communities. We would love to see them keep going. So exit and succession planning and resiliency planning are two things that I would throw out as really important focuses for small businesses in the Northwoods.
At succession planning, we have so many family-owned businesses in our rural communities that does become kind of one of the key things to keeping our communities vital with businesses that we absolutely essentially need. So there is a comment from Mia. I love the Welcoming Immigrants Initiative. What about intentional strategies for welcoming people of color in general? She's heard from many Black business owners in the state about not feeling especially welcome. What are some existing strategies to build inclusive and welcoming rural communities for entrepreneurs of color?
I love the Aspen Institute framework on Thrive Rural. A huge part of that framework, and I can put the link in the chat, is about building inclusive communities. And there's tips and tricks on what communities can do to build that kind of environment. And then I'll just make a pitch for WDC's marketplace event every year for entrepreneurs of color. Is another tool to get people connected to state contracts and really help those businesses grow.
I would just plug one of the partners in Lancaster that's been super helpful is the Latino Chamber of Commerce. So their team has a lot of resources to help support entrepreneurs of color, both in larger communities and smaller communities. And they've been a really helpful resource for that group. And I know that there's also other chambers focused on different ethnic groups. I think there's a Hmong Chamber of Commerce and an African American Chamber of Commerce. So those groups can be really helpful.
One very non-specific example, but making sure you're having a representative group when you're having these discussions. So if you have 10 people in a room that all look the same and you're talking about diversity, equity, inclusion, you're probably not going to get as far as you need to. So really being conscious of having inclusive conversations to make inclusivity a key point that you want to focus on.
I think those are all great points. What I was more getting at is the community around the entrepreneurs, more the ecosystem, not necessarily. I definitely think technical support to the entrepreneurs is crucial, but I'm thinking more about, the community members themselves that live in rural communities and who are probably predominantly white. How can communities be more intentional about, making sure that those folks are being welcoming and making sure that they feel that, just the people around, I guess, the entrepreneurs of color is more what I'm getting at.
One of the kind of tools that Lancaster used as they worked with their regional planning commission to kind of give a presentation to different community leaders about demographic change that was occurring in the community and kind of highlight the necessity of being welcoming to new individuals, or otherwise the negative effects that shrinking population were going to have on their school districts and their tax base, et cetera. So they made a pretty fact-based argument for why being inclusive was important moving forward for their community.
So we have a question about childcare. We talked a lot about childcare today. What are we hearing as a group in terms of fixing childcare? Are there any successes that we've seen on the horizon, or communities that are successfully changing their childcare landscape?
Childcare is something our team works on a lot. We have our revamp specialists. I think Jerry's on the call with us today. He's working really closely in Adams County with a group that received a Dream Up grant from DCF and are working to kind of establish their nonprofit so they can seek additional funds. So it is kind of a community by community challenge at this point. I know it's something that our leadership has talked about is critical when you're developing, an economic development strategy for the state, that it's a key component of that work. And that we're not just talking about, more transactional versions of economic development, that those kind of, the definition of economic development is so much broader and wider, which is also a challenge for economic development professionals who are used to, real estate based transactions or small business, and entrepreneurship attraction or development work. So I think we're catching up as a field to understanding what role we can play. And from my perspective, everybody's just kind of scrambling to make small wins at this point, but there is a need for a larger, more comprehensive approach to the issue.
I would say the base of the answer is that the childcare business model is broken. Parents pay a huge portion of their income and they cannot pay more, while at the same time, childcare centers do not have enough income coming in. And so therefore they're paying very low wages and really struggling to attract workforce. So really the key is bringing in like a third funding source, whether that be more government support, whether it be more philanthropic support, whether it be more business support. So a number of our hospitals are very engaged in these conversations because it has a huge impact on their workforce. And it also impacts childhood well-being and making sure that we're growing healthy kids in our communities. And kind of what I would say we've seen as success, if you would, is bringing in an additional layer of support that makes childcare more sustainable. So whether that be you have a business that's helping to subsidize the operation of a childcare facility, or you have a philanthropic organization that's helping parents with the cost, or you have currently like childcare counts payments coming in from state government. Those have all been somewhat successful in at least sustaining what we have and making it not close. And that's still not an answer for creating more spots and making it more affordable. But we definitely need more players who have not traditionally been in the childcare conversation at the table. And that's something a number of our hospitals are currently doing.
I think we're seeing more businesses bring it in-house as well. Building a new building, we're going to create this space that is for our workers' childcare in-house, and we're going to build it into our business model. This is going to be something we provide. So we are seeing a lot more private businesses actually take it on their own, which, that's an interesting solution. It doesn't fix the general problems that Maria talked about, but really thinking about those small businesses and large businesses incorporating childcare directly into their business model, so that doesn't have to be a concern for them.
Certainly one of our big challenges. And I think the more we communicate about what we're seeing that's working across our communities, the quicker we can deploy those solutions and hopefully move the needle on this issue. So well, it was a comment, but I'm going to phrase it as a question. Creative economy and Wisconsin. Ann Katz dropped a comment in the chat. And personally, one of my favorite parts of rural Wisconsin is all of the cultural offerings, everything from Big Top Chautauqua to American Players Theater to the Fine Arts Community in Mineral Point. A lot of our big brand name offerings as a state when it comes to cultural and creative and fine arts are occurring in our rural communities. Can you speak a little bit to the role of creative economy across the arts and then creative entrepreneurship in our small towns?
Well, I'm biased. I used to be an executive director of an arts agency. So it's something that's definitely near and dear to my heart. And I think there's this misconception that artists are just dreamers, but they are business people. And so they are entrepreneurs themselves. And I agree, like the arts and culture offerings of rural Wisconsin are terrific. And I think, again, they're also an opportunity to fill our main streets and kind of bring new vibrancy to downtown. I think about, I'm using Rhinelanders, a lot of examples from Rhinelander today. I think I saw Donna on the call from Worm Farm. They also do some terrific work to bring people into rural communities to explore kind of the intersection between public art and agriculture in Sauk County. But my example again in Rhinelander is the Art Start organization. It's a nonprofit, and during the pandemic, they really stepped up to really become a almost a social organization. To there was this need for reconnecting with humanity and each other in different ways, and I think the arts did a terrific job of pivoting quickly to fill a gap, and there's a dire need for investment in that work, as well as helping to understand what other local policies can support startup businesses and creative businesses that, again, impact tourism, impact the vibrancy of the downtown area, and really help highlight the local culture of place, which is, I think, something we all really connect to when we experience it.
I would say that when we think about creative economy, we also often think about it in terms of workforce. Workforce is like the #1 concern facing the healthcare field right now. Ensuring that we have enough staff and clinicians available to provide the care that people need is very challenging. And when we think about ensuring that we have those clinicians in rural communities, the #1 strategy of terms of recruiting people in is making sure that your community is a desirable place to live. So some of those creative economy tools can be really helpful, right? Like your summer concert series or your murals in downtown, or all of the things that make a community feel more like home, feel more welcoming, offer recreational opportunities, are really helpful in recruiting workforce to rural areas, and are thought of by our hospitals when they think about how to overcome some of their workforce challenges, which are very severe right now.
Yeah, I was going to speak on the sense of place as well. I've had the privilege to live in Eau Claire for 5 years, Stevens Point for 4 years, and now I live in New Richmond, Wisconsin, all which have a great creative economy. It's lovely to live in these places where art, like here in New Richmond, they painted all of the electrical boxes. It's something so simple, but it's so cute. Like every time I drive, there's a butterfly one right by my kids' childcare, and I just love it. I love driving past it every single day, and that kind of stuff really makes a big impact in getting people to stay in the place that we all work so hard to get them to move.
It's such a vibrant part of our rural communities. And I like to brag to my friends who live in other parts of the country. Wisconsin has, not sure if I cut out there. Oh, there I'm back. Wisconsin has some of the most amazing creative communities, or small communities across our rural areas. So one more question before we end. We've got about 9 minutes.
Well, was there a question in the chat that she was maybe looking at?
I am now.
I think maybe it was the final question in the email about the upcoming, event or something that we wanted to focus on.
Okay, we could do that.
Yeah, that's great.
Broadband in rural areas. So to that, what is an event that you want to promote or something that's coming up in your organization that you can share with us?
I can start. I would just make the plug, if you aren't already, kind of including multi-sector partners, including healthcare in your local economic development efforts, please do so. There's a incredibly strong growing momentum within the healthcare field to acknowledge that clinical care is really only a small portion of what makes people healthy, and where people live, work, and play has a huge impact on their health outcomes. So there's more momentum than ever before for healthcare organizations to want to engage in community and economic development conversations. If you need help making those connections in your local community, please reach out. I'm happy to help facilitate them for you. And one thing that struck me earlier, you were talking about grant writing capacity in rural communities. Many of our hospitals have grant writing expertise and experience that they are welcome and willing to share with rural or partners in their communities to bring dollars just more broadly into their community. I know Dan Howard is on the call today from Hillsborough, Wisconsin, and that's something their hospital has done really successfully. So thinking about multi-sector partners, including healthcare, and leveraging some of their existing expertise to help with efforts you have going on in your community is a great strategy. And please reach out if I can help make this connection.
Great, I can go next. I talked a little bit earlier about some of the challenges for rural communities and accessing resources, and obviously like population and just the scale of growth compared to the economic model we're working in, is an impact. And so I think regional collaboration is key to finding solutions and help address issues that the communities want to face. And so I'm really excited. WDC and the Office of Rural Prosperity are going to be working with our rural regional planning commissions and Marie and Wisconsin Rural Partners on a statewide and Kristen and UW Extension and Glitzy. There's a lot of partners, so a lot of collaboration happening. And we're going to be aligning some of the regional planning efforts with a statewide plan for rural development that our office will lead. So I'm really excited about that collaboration. We just received notification that we're going through an award, a technical assistance award from an organization called CREC. That's an EDA funded process for doing this kind of strategic planning and alignment work. So I'm really excited about that.
And I'll throw out a little pitch for, we were talking a lot about agriculture during one of the presentations and that being a focus. I will throw a little spotlight on our Food Finance Institute here within the Institute for Business and Entrepreneurship. Our Food Finance Institute provides a lot of programming and technical assistance for food production, agricultural businesses all across the state. So there's a lot of unique opportunities with that. I'll specifically highlight our financial management boot camp. The new cohort is launching in May. I'll put the link in the chat for any food production business or agriculture business that's looking to grow. It's a really great opportunity to get involved directly with our programming. So agriculture is a huge focus in this state. I know there's lots of resources, but I'll throw out a little plug for our FFI, and Andy Larson's on the call. He can say hi and put the link in too, I'm sure. But lots of great resources for the agriculture businesses in the state.
Fantastic. Any other closing comments before we go?
I would just say thank you for the opportunity to chat today. This has been fun. And I would say that we did not even coordinate on purpose. So clearly we're all aligned.
We are all of the same mind here today. We love our rural communities and we've got our red on for spring and for the Badgers. Thank you guys so much for participating. We are so lucky to have your organizations as resources in our state and to have you all participating in those organizations and helping rural communities. Any links we have or whatnot, we will freely share out to the audience and to our participants today in our follow-up emails. Keep the questions coming, participants and audience members. We are so excited you're here today, and thank you again for speaking with us.
Thanks, Kristen.
Yes, thank you, Kristen. Thank you, Beth. Thank you, Melissa and Marie. For the last part of the summit, it is my honor to introduce our keynote presenter, Dr. Norman Walser. Dr. Walser is Professor of Economics Emeritus at Western Illinois University. In 1989, he started the Illinois Institute for Rural Affairs, also located in Western Illinois. Dr. Walser is widely published in local economic development, public finance, collective impact, and community entrepreneurship with numerous articles and 28 authored or edited books. Most recently, he edited or co-edited the Rural Areas in Transition, Meeting Challenges and Making Opportunities in 2023. He is the past editor of Community Development and currently co-edits the Local Development and Society, a refereed international journal. He also serves the Governor's Rural Affairs Council, chairs its Economic Development and Infrastructure Committee. I have only scratched the surface of Dr. Walser's credentials, and today Dr. Walser will discuss making rural challenges opportunities, and he will also discuss effective ways that local leaders have taken advantage of these opportunities to make a difference in rural communities. Dr. Walser, the floor is yours.
Thank you very much. This will be, we'll run through some slides here fairly quickly. And what I wanted to do was provide you with some sources for later on, as you were looking at doing things in your communities, that you might be able to find some quick access to some places and then, pursue some more research. So we're not going to dwell very much on any one of the slides, but I'll try to give you a variety of things that I think are pretty useful. And I begin by saying that I have a background very similar to Patrick Robinson's when he first talked. I have been in Illinois all my life. I've been in rural areas all my life, and I still own a family farm and grew up on a farm and so forth. And so I really have a really strong feeling for the benefits and opportunities that can be in the rural areas. And I think the situation we're in now is that with the pandemic and other kind of things as we're coming out of the recession, that there are really some opportunities for rural that I haven't seen in the previous times. And so I'm kind of excited about them. But I think the other part of it is that these things aren't going to become trends unless we make them trends, we being the rural communities. And I think we have innovative opportunities that we can convert into action plans. And I think that's really where we need to go. So next slide, please. So the presentation here very quickly will be kind of rural as we saw it in the past, some changes that are underway, some opportunities I think that are happening, and then really the focus on how local groups can direct those changes with the innovative approaches. And then finally, the challenge that I'd pose to you is what can we do to actually make things happen in our communities? Next slide. Some of the considerations, and some of these have been done already or have been talked about already, but they're really important to consider because rural is not rural. Rural can be a lot of different things, particularly the non-micro. As we do research in Illinois, we typically think in terms of neither non-metro nor non-micro, if that's a phrase. That's really the rural groups that we tend to work with. And some of the work that we'll talk about in just the next minute or two, we really took a look at micropolitan communities, and particularly the small towns. And micropolitan micropolitan counties, as you probably know, are those that have a town of at least 10,000 but no town of 50,000 or more in the county. And some of the Walmart Foundation work recently indicated that there's really some opportunities for the micropolitan counties to be kind of regional drivers in largely rural areas. So if you think about the trends we've looked at in the past, it's mechanizations of agriculture, interstate highways, internet shopping, past technology advances. They tended to favor clustering in the larger centers, loss of high school graduates, and these kinds of things. And particularly, I think the essential services in many cases in healthcare, particularly as was referred to earlier, have essentially been challenged. And so, next slide. So what I think the rural opportunities are, and again, many of these have been mentioned already, so we won't dwell on them, but the telecommunication advances and particularly the way they're being used, I think are particularly important. Telehealth options now are accepted for reimbursement, which I think is a major change. The Zoom meetings, we can share screens, and the kind of things we're doing today we could not have done or did not do 5-7 years ago. The broadband investment by states into rural areas, I think, are really important. And then I think the question of remote working opportunities, as was discussed earlier, how much that's going to be accepted for how long and to what extent, I think that's still a little bit in doubt, but I think there are some really good opportunities, particularly if you think about remote working opportunities for a business or marketing your services, as Tessa was talking about, over the internet. So you really have new business starts that are strictly using the internet. And I think this is really sort of important. And then I'll jump down the growing discontent in urban, how long that'll last. It may have been pandemic related. Affordability of living is really a serious issue, especially for younger families. A social engagement issue by older residents, and obviously we're going to have a lot of older residents in the future. And then the lifestyle interests, I think, are a little different among millennials and young adults. in terms of natural recreation, these kinds of things that are maybe a little different in terms of priority than we had in the past. I think the real game changer could be artificial intelligence in vehicles. And most of the technology in the recent years has really been to reduce remoteness. And it seems to me that AI vehicles could make a serious difference if they catch on and if they develop well for the remote rural areas. And particularly, when you go to a hospital and so forth, or you go to a doctor's office or whatever it would be for older people. So my thought is that they probably will allow older people to remain in rural areas or work in or live in rural areas longer than in the past. Next slide, please. Just some very quick, next slide. We advance the slide, there you go. We did a little bit of work, just kind of casual research on particularly on the population changes as we were looking. We had some work going on in Illinois that piqued our interest in. So we looked for the next 10 years, basically, and what kind of population changes are projected by metro versus non-metro. And here I'm using the ones that Tessa and Steve had talked about earlier, that definition. But if you look at this, the non-metro areas are likely to see the 10%, roughly 10% growth in the elderly population. But the only other population that shows an increase really is the 25 to 44-year-olds, and according to these projections. So that piqued our interest, and we thought, well, let's take a look at what kind of things or movements does that group take, the 25 to 44-year-olds, roughly the millennials. The next slide, please. And so we ran some casual regressions here, and we looked at between 2000 and 2010, partly because that was a more stable period, and the other thing was we didn't have serious 2020 census data when we tried to do this. So we looked at ages 25 to 24 and net migration as a percentage of total population. And the things that I thought were interesting, I highlighted in yellow, namely the proprietor share of total employment that has a positive relationship, meaning that people tend to be migrating towards those places, which strikes me, I think, as confirming what Jess was talking about in terms of entrepreneurship. Housing desirability, and here we just created a simple index looking at the size of the house versus cost and so forth. And housing index was in fact important in a positive way. And biggest thing I think was the importance of natural amenities. So it looks like this millennial type group or that age group essentially is driven by the kind of things that we've been talking about in the past. The next slide. So then we turn to some of the more what the implications might be and what we might, and we as local groups might be able to do about them. And it seems to me that they really fit into several categories that I'd like to talk about later on in the presentation. And placemaking, I think, has been, we've known about it, it's been important. Michigan's been kind of led an effort in that for quite a few years. And but I think placemaking is really becoming a more and more important issue, and particularly in smaller towns. Norman Milder and others have talked for quite a while about the downtowns as a move from retail into social centers and these kinds of activities. In the Netherlands now, we'll talk just briefly about this later, but there's a bigger focus on what they're calling cultural hubs, which are really almost like co-working spaces, but they're sharing spaces. Are not all co-working, but they're just sharing spaces in the middle of the community where people can come together and basically form some sort of a social network. And the importance of social capital is really, I think, becoming important. The second thing that I think is particularly interesting is, and some of this work has been talked about in the previous presentations, but the idea of transitioning businesses. And I like to separate succession planning from transitioning businesses, because I think that succession planning, while only about a third of the businesses, by some studies, tend to have in place, I think there are some other opportunities going on where third-party groups are coming in and becoming involved. So I see succession planning, I see business rehab and conversion types of programs, and Good Works Evergreen, which we'll talk about just briefly in a later slide, and Red Tire, I think are two examples where third-party groups are actually becoming actively involved in kind of working with the businesses to either buy them and rehab them and resell them, or do something along the lines that's kind of separate from just a traditional succession plan. And then finally, the community supported enterprises or community-owned enterprises, which I've been working on, and we'll talk more about as we move ahead here. And this is something that I'm really seeing more and more of interest across the country. And I'm seeing in Illinois 3 or 4 situations now where, in fact, they're being kind of promoted and being able to work. But then I think also, as was mentioned earlier, the idea of having age-friendly housing. And the issue here, I think, is that we have a population decline in some instances, but the number of households stays about the same. And this is pretty much what Ben Winchester has been discussing in recent years. But the idea that we're not opening up enough housing for people, younger families who would like to move in. And while the housing that the older person would leave may not be immediately suitable for the needs of the younger family, it basically would open up opportunities for the families to have a place to live. So I think AARP has had a lot of activity underway in the last several years, and talking about different, not just older friendly housing, but it's basically age-friendly housing for all ages. And the idea, can you age in place? Can you retain residents? And these kinds of activities. So I think that's something that we'll have some opportunities to work on as we're in this kind of new environment. Next slide, please. Here are just some sources of where a lot of the next material will be coming from. And the guidebook and resources for starting CSEs, for starting community supported enterprises. This was really a report that we did for the North Central Regional Center for Rural Development. And Greg Weiss from Wisconsin was important in working with us on that. And the emergence and growth of community supported enterprises that we did, I think a little bit earlier, just maybe the emergence and growth was 2016 or 17, and the guidebook was 2019. The guidebook is not a manual, but it basically describes 35 to 40 community supported enterprises, a page or 2 on each, and then the kind of things they did, the resources they used, and then it suggests different alternatives and approaches that you might take. And then community-owned businesses is a book that came out last year, and it has 8 different countries: Germany and Italy and England and Taiwan and Australia, I think. But it has a number of different examples, chapters by people in those countries, talking about the kind of things that they've done in using a community-owned or community-supported enterprise type of approach. And they've gone into social services and various things. And it really is kind of shows you, I think, the capacity of what we would have with more of an active social involvement or social ownership kind of activity, or social investment, I should say. It's not something owned by a city. It's or owned by a government. It's basically community investors investing some money and then hiring a manager to operate the business or operate whatever they're doing. Next slide, please. So let's talk a little bit more about some community supported enterprises. And the idea here, and they really have focused, I think, in a lot of states more on essential services, such as a grocery store. And the picture there with the white building is actually in Vermont. Both pictures are Vermont of the buildings. And I was lucky enough, maybe 4 or 5 years ago, to do some presentations in Vermont for the Rural Development Group. That's not the title of it, but it's the Council for Economic Development or something. And so when I was there, I ran into a number of examples where there were grocery stores or restaurants or other places that had actually gone out of business, and the investors had pooled their funds, reopened them, hired a manager, and were operating pretty successfully. So that piqued my interest. So I had a grant from the North Central Regional Center and I think EDA and some others. And so I spent some time in Vermont traveling around, interviewing places and trying to get a handle on really what's going on, and more particularly how they might be applied outside of Vermont. Vermont's a small rural state, relatively liberal in persuasion, and so there's a high volunteerism tradition, and so it's not necessarily your average state. So I wanted to see, could in fact that model somehow be brought to other places? And I'm pretty much convinced that it can. So what you're trying to do is you have to have a viable local business. So a grocery store can go out of business and maybe should go out of business if in fact there's not the market. So if you're going to bring it back, you don't bring it back as the original grocery store. You bring it back in a new model. And that's what Vermont has been really successful, has been able to do. You have to meet the operating conditions of any small business. You have to make a profit. You have to, these are not places where people are donating money every year. You have people investing their funds, but you basically expect to make a profit. And if you have any debt, you have to retire the debt. Frequently, there are some tax advantages and so forth. So a lot of times the residents that are investing the funds are older residents, have been in the community. They need certain kind of services. They're not expecting an ROI, a dollar ROI on their investment. Rather, it's the idea that they want to have access to some type of venture, whether it's a restaurant or a social center or something, just because that makes it a better place to live. They typically, the successful ones, have hired a manager to run the business. So frequently the manager has come from another place. Maybe it's a retired manager, wanted to continue to do it, but not necessarily do it to the extent that they had in the past. Key on this is that the volunteers are heavily involved in the operations. And part of this, as we'll talk a little bit later, the volunteers really, the older people particularly, are interested in being involved in something, into some social engagement. And I'm seeing in the ones that I interviewed, they really get heavily involved in just managing the operation, managing in the sense of they stock shelves and they run the cash register and they do all kinds of activities in the CSE. And what that does, of course, is that it lowers the operating costs. So if you had a grocery store that wasn't highly profitable in the past, but if in fact you don't have to retire debt because you've got local investment, and if you have a lot of volunteers working in your store, your labor costs are down, so you may be able to operate at a lower profit margin than the previous store that was strictly private. They also tend to buy local, and this builds a lot of camaraderie. Sometimes it lowers the cost as well, but they have multiple profit centers. And this means that they're buying local arts and crafts. A lot of times they will have, say, dinners, maybe once a month or something like that for investors or for the community that generates a profit. Some of them have had an extra building where they would operate as sort of a building for rent, so you could have weddings and these kinds of activities in it. So they were operating not just as the initial grocery store was, or just selling groceries and so forth. They have lunch counters, they have delicatessens, they have a lot of different things, again, at a small scale, but they seem to be attractive to the community. But the big thing is that they're involving social activities, that they're bringing people in to do other kind of events. And you've got some examples even in Wisconsin. New Glarus, for example, has a restaurant, or had a restaurant, I think still does, that dealt with organic activities and had people that were members of the kind of like a club. They were investors, and they were where you could buy meals, so many meals in advance and so forth. And it just was an example that we used at some of our conferences as well. Next slide, please. One of the things I wanted to start with, just to give you a little bit of background, because this community shops and social enterprises types of activities have really been in England for quite a while, and particularly the Plunkett Foundation, and you'll see a reference later on, but the Plunkett Foundation is really a major source for you to take a look at if you're interested in this. And the story on this is that as early as 2011-12, in that period, Plunkett decided that, or wanted to help some small communities. And the small rural communities that were facing population declines, the local businesses, particularly local pubs. And the pubs, nobody wants to lose a pub, obviously, but basically the pubs were being threatened because people were buying less liquor and they were being able to get it in other places. But the pubs were actually social centers. And so the concern was, as your pub closed, then the social opportunities in your community closed. It created more loneliness, particularly among the rural residents, and loneliness has been linked to health consequences and, in the states as well. And so what Plunket did was started to work with some local groups who could actually refine or invest in the pubs and redesign them and do different kinds of activities. So they went from a social center mainly starting as a pub, but then turned into more of they could be daycare centers, they could be other kind of services that were being provided in this kind of an environment. And again, they were owned by the shareholders, the residents. Now, I should say up front, England has some laws that are very different and would promote this kind of activity that we don't have in the United States. So it's not that they're directly can be brought into the United States, but they're, I think, a really good model to look at. And I would encourage you to go to the Plunket Foundation community shops or community pubs, a better form of business, on their webpage. And it's cited later on in this report. But the community pub started, and then they branched into community shops. So the community shops operate very much like a CLC, and some of the results I just listed here, they have 407 of them that are in existence, 12 opened last year. 220 of them offer postal services. They have 1,300 full or part-time workers, 7,500 volunteers are involved. Their survival rate's 92%. The majority have between 100 and 300 members or shareholders, people that have bought in, and they buy from about 28 suppliers. So it's a kind of a model that I think was a precursor of what we're getting now in the CSEs in Vermont and other kind of places. Next slide, please. Another thing that was kind of interesting, and this has nothing related to pubs, I would emphasize, but some of the churches in England, they're having declining attendance, as you see in the upper right slide. Small areas, small towns. What they decided to do was they wanted to maintain a historic building in the community, and so the community was behind them. But they opened some space in the basement or other places to commercial activities on a part-time basis. So they had populations with special needs that they could, provide some sort of service, or maybe a couple of days a week. They offered low-cost meals, like a restaurant, or they had co-working spaces on some of the property. They sold merchandise sometimes. They had various gatherings, and obviously the commercial activities were compatible with their religious function. But the idea was that here you've got an institution that's in most rural communities, and they were able to adapt it on a part-time basis to do different kind of things that would create a better social environment, a better quality of life, and just a nicer place to live, a better place to live, and attractive to people coming in. And in England, they were using the revenues partly just to maintain their structure. They didn't want to lose the church building because it was such an icon in the community. And I've cited the Plunket Foundation here as a place if you want to look further. Next slide, please. I was in Edinburgh, Scotland one time several years ago, I guess, doing some presentations in Glasgow and Dundee and some places. And I ran into an urban environment. It's a neighborhood that was faced with a grocery chain that was coming in, and the fear of the little store or the people to shop in this little store was that they wouldn't be able to get access to fresh fruits and fresh or locally grown vegetables and things. So essentially, they took a relatively small storefront, and as you can see from the slide, 200 people met. They had a meeting, 50 people. They raised some money, and they opened it as a cooperative. And what they're doing is they stock fresh vegetables. They sell vegetable boxes on a subscription. So kind of a community supported agriculture kind of model that they're using. When I visited there, the store was just crammed, as you can see in the lower slide. The top picture is a picture of the outer part of the store, but the bottom part is just a small selection of items. It's not where you do your weekly or monthly grocery shopping, but it's basically a target kind of market. And they're operating with trained volunteers. They have someone called a volunteer champion. They only have 3 paid staff. They have 30 volunteers. This was when I was there in 2018. And they have a management committee, and that the committee has to work at least an hour a week in the store so that they know what's going on. But it was something that I thought was really kind of unique. And as I'm thinking about larger cities, larger communities where neighborhoods are sort of deteriorating or maybe losing population. And, you know, when I was younger, or when I was very young, there was a grocery store in all the neighborhoods. That's been long gone. And this is kind of a rejuvenation of marketing to a group that's really interested in certain kind of activities. And it wouldn't have to be just a grocer, but it could be other things as well. So next slide, please. So then why and when are CSEs types of businesses useful? We have a sluggish economy, small and declining category markets. This you've seen, aging the business owners, they bring more retirements, as I mentioned earlier. The loss of high school graduates, there are fewer potential owners. Frequently, the capital that or the amount of return that these stores in the smaller towns particularly have isn't really attractive to a traditional lender and for private capitals. Very few have succession plans in place, as we talked earlier. The elder need services, and the question or the issue here that at least I think I learned in traveling in Vermont was that the elderly, or at least the perception there, is that they really would like to volunteer, they would like to be involved, but so often they're not asked. And I think if there's a message I would leave with you is think about, as you're working with your community, are you really asking the elderly to become involved? And sometimes it's money, sometimes it's time. And when you talk about a CSE, we're not really talking about spending hundreds of thousands of dollars. We're asking people to contribute $1,000, $2,000, maybe $3,000, something like that as their initial investment. And an example in Illinois, for example, a grocery store in a small town had closed. They had a meeting, and there was 30 volunteers or 30 people showed up at this meeting to think about what they would do. And those 30 people pledged $40,000. That was then leveraged, and they opened a grocery store at a couple $100,000 base. So in essence, they borrowed money, the city put money in from a tax increment financing program, these kinds of things. But it started with that 30,000 that the people volunteered, or the 40,000 people volunteered. They can work well with essential food and groceries and so forth, but I've seen them in restaurants, I've seen them in libraries, I've seen them in just a lot of different kind of venues. They're flexible services like tourists, unique markets, part-time specialty businesses. We're seeing more in Illinois about antique stores, for example, in small towns that are on a part-time basis. So the antique store is owned by retirees that go south for, let's say, 3 months of the year, but they have an antique business for, let's say, 9 months. But these kinds of things, an antique mall, for example, could be put together with the CSE or these kinds of activities. England is doing daycare center, other kind of efforts as well. So it's not really limited to the traditional commercial kind of activities. Next slide, please. This is another example from Vermont. And this is really out in the middle of nowhere. I mean, it took me about a half a day to get to this town. And it's a township. It's a population of 2,100, and it's very remote, beautiful environment, obviously. But this intrigued me because, if you look back at the CSE books or reports that we wrote, we've done about 35 or 40 examples like Shrewsbury. So if you want to see more information, you can go back and pull it up there, or you can go to the website. So it was a general store. It had been operated for, generations, several generations. The last person to operate it her health was failing, and so she had to close. But what the family did was they made a bequest. They believed in rural, they believed in having these kinds of opportunities, and they made a bequest to promote rural development, including stores like Pierce's store. And I think this is something that we really haven't done, at least in my experience, in rural. there's a fair amount of wealth in rural in terms of elderly people. They're comfortable financially. Often they have a strong allegiance to a community they've lived in, their parents have lived in long-term generations. They may be willing to invest in some type of a measure that would continue to promote the store type of activities. And at least the communities that I've worked with, I've not seen that done yet. I think it's something to look at. So when the store closed, the Vermont Preservation Trust, they had a request for proposals. One group responded. The contributors, the members contributed small amounts of money. They raised $125,000. They leveraged it with a grant of not quite $300,000. Did a feasibility study, said that 325 people within 3 miles had to spend $15 a week. Now that was back in, I think 2018 19 maybe when I wrote this. And the members receive a 2% discount on purchases, but they don't get a dividend. So they're not expecting to get their money back. And there's the residents rehab, restock, all these kind of things. The volunteers operate the store. I called them maybe 6 months or so ago. They're still going strong. They've had several part-time managers, but it's still going on. They have local crafts, produce, bakery, convenience, and various things. And they're holding community events. Again, it's sort of similar to some of the other activities, but they're holding dinners. And what this tends to do is to build and retain that capital. But it's become kind of a tourist attraction, apparently. Again, it's not on a beaten path, but you're seeing various things that the locals are making and selling, in the operation, which again, obviously increases buy-in. Next slide, please. This one is a little bit different story, but it's kind of intriguing, and you may have seen this on the news. But Dan and Witt's store in Norwich, Vermont, and I happened to be there just a little bit before this actually took place. But it was a third generation business. It was a general store. If you're not familiar with general stores in Vermont, they're pretty much of like a mini Kmart in the sense that they have all different kinds of activities, but they're not very large, not a big selection of each, but they have a lot of basic kind of items, but a lot of unique. They may sell clothing, they may sell hardware, they may sell a little bit of a lot of different kind of activities, but they're kind of a tradition in Vermont and a tourist attraction. So this general store, Dan and Witt's, couldn't find help. They were just, they had several positions open and nobody to fill them. So they were facing closing. They were third generation in the community. They actually had some sort of a national market as well, where you could actually on Google or someplace or Amazon be able to buy from them. So what happened was when the word got out that there was a serious possibility that they might go out of business, volunteers stepped up and mainly retirees. And so the retired finance director went to the deli, a physician runs a checkout. The people that are working with them are basically donating their wages to local charities. So it's the idea that the camaraderie and the social capital in this kind of an environment was such that people were willing to step forward and play these kinds of roles. And I think this is not necessarily something that any of us could replicate, right away in Wisconsin or Illinois, but it may be a situation to at least consider, because it was really, I found it kind of intriguing what they were willing to do. And I thought the sign was kind of interesting in terms of the scope of activities. If we don't have it, you don't need it. And that's really was kind of the attitude that they have, that there's just a little bit of everything. But it was really an interesting experience. And there are many other general stores that you could talk about. Next slide, please. Next slide. Okay, there we go. Another, back up one, please. Oh, there you go. Another activity that was kind of interesting, when you look at the community support and enterprises, sometimes you just can't make them happen. And so St. Joseph, back up one. St. Joseph, Kansas, which is a very small town, had tried to put together, their grocery store was on the main street, and they were basically trying to somehow keep it going. And they had population declines. The store obviously wasn't making a profit. They were good. The town was going to be left with really not very much to do, especially the ways to purchase food. So what happened was they tried a couple of CSEs, and then finally, when they just didn't make, they couldn't get the CSEs to be funded. I think we lost the slide somehow. Can we go back? I'll continue, but maybe you can find a slide. But essentially, what they were concerned about was, how do you somehow find access to food? Are we finding a slide? No. There you go. So basically, the city government, the municipal government, actually bought the land, and then they had a referendum to guarantee a loan to have some of the private people take it over. They went through the various activities, and then when they couldn't keep a local owner, local manager in the process, the city, as a city, actually took over the store. And there are several municipal-owned local grocery stores in Vermont or in Kansas, but they basically founded a grocery distributor. A local couple had then bought the inventory, and they ran the business for a while and then retired, and then they couldn't find another operation. So basically the city then took over the inventory, and now municipal employees, they're actually municipal employees of the city, manage the store, and there's 5 full-time and 10 part-time. But I thought this was kind of interesting that for smaller towns to take a look at. I don't know whether the municipal code in Wisconsin or even in Illinois, whether it would allow this to happen, but it would probably be operated as an enterprise fund or something like this. But I thought it was an interesting option to at least explore. Okay, next slide, please. Netherlands has been working on some things. I have not seen this in person. It's been quite a while since I've been in Amsterdam, but this basically was trying to put together, let's say, a vacant building that would basically have a combination of, let's say, artists and craftspeople and co-workers and other kind of groups, but to form a mix of various functions and users, and have it in a way to somehow create a new entity in preferably a small town. But the idea that you're trying to build camaraderie, you're trying to make it a unique place, you're trying to build social capital, just make it a pleasant place to be. It's shared ownership. They have a common goal of trying to renovate the city or renovate the area, neighborhood. Has local support. You have to have a triple bottom line where you're looking at profit and environment and social capital, these kinds of activities. The purpose is really to cultivate and to make an active community. And the key here seems to be, and there's not a whole lot written on that I could find at this time, but it seems to be that the big issue is, can you find a genuine need or a real need that the people are willing to rally around? And that's certainly been true with community support enterprises as well. That one of the keys is, as we'll talk in just a minute, one of the keys is you really have to find something that people feel really, really interested in. Next slide. And the third strategy that I wanted to talk about in general was the idea of transitioning businesses to next generation. And this is more than a succession plan, but it's the idea that if your succession plan doesn't work, or first of all, if you can't, if your succession plan doesn't work, and then if you can't somehow sell the business on the open market, then is there a third alternative? And there's 2 models that I'm kind of interested in. I'm in a process now of trying to research an edited book on this topic, on the innovative ways around the world that we're doing these kinds of activities. But you might check out Good Works Evergreens. It's in Montana. It's a nonprofit. They buy businesses that they think they're going to lose, that are going to close. they rehab them and reorganize them, the team of people that buy them. And then they try to find a buyer. And then they basically have been able to lumber manufacturing, some hardware, paint businesses, various things. But it's a small group of people as a nonprofit that are doing these kinds of activities. The next, what they're doing now is expanding to some other business models and seem to be, doing pretty well. And they have a chapter in one of the books that we recently did. The other one you're probably familiar with is Redefining Retirement, and that's the Red Tire program. Back up, okay. The Red Tire program that's run at the University of Kansas. And what it does is it matches small, medium size enterprises that don't have successors. And they start looking at Kansas University alumni and students and so forth. But they have a website that shares the information. They work with business owners and after the purchases, and they try to bolster the economic stability. Been pretty successful over the years, working in multiple states. They go to their website. It's 425 businesses and about 105 million retained. So that's pretty important. Next slide, please. Some lessons. It seems to me that what we're finding from these kinds of discussion, local social capital is really high on the list. People are really driven by the need to have social capital. The businesses have to continue to build that social capital. You have to have a genuine need for residents, and you have to have volunteer opportunities. They can reduce social isolation and loneliness. The second important point is that it's knowledgeable leaders that are taking action, and you have to motivate the residents. But it seems to me that state and financial assistance is not necessary always, but it can be important. And the owner and operator or manager has to have experience and commitment to the process. And the other things we talked about, you can just kind of look at them. But I think the big thing is that it has to be sold well to the community. They have to be willing to buy in. They have to see that it's working, and they have to have a chance to be involved either with money or other kind of activities. Next slide, please. Earlier, you discussed some work going on in Wisconsin about the obstacles that rural leaders are facing. We just finished some work in Illinois, or it's actually still kind of ongoing. Governor's Rural Affairs Council, Rural Partners of Illinois, and the Illinois Institute for Rural Affairs. We did a survey of rural leaders and tried to figure out what kind of issues do you think you have to overcome in order to make some serious things happen. And as you indicated earlier, difficulty accessing federal and state resources. And this with Illinois goes all the way back to late 1980s. And we started the Governor's Rural Affairs Council with the explicit purpose of collaboration, forcing collaboration among state agencies that deal with rural issues. And this has really it's been going on now for almost 35 years. And one of the things we did was we created early on was in print form, a rural resource guide that's been now made into a electronic rural resource guide so that people around the state can log into it and try to match up the kind of what they're trying to do with the needs. And it's a keyword search, it's a key agency search. So if you said something like improve housing, then it would hopefully call up a bunch of programs in the state that deal with housing issues. So you don't have to go through the hundreds of programs that are currently in existence. A second issue that they thought was really important is we have to find ways to commercialize locally grown ag products. And the CSEs is a possibility for grocery stores. We have 2 or 3 of those activities underway now where smaller towns are losing their grocery stores. And what they're trying to do is build in local produce. They're trying to stimulate local produce producers. I don't know that we've really gone very far yet with cannabis in Illinois, but several years ago, that was kind of a hot item. I don't know that exactly if we've got the processing capabilities yet to make that stable. Modernizing delivery of local public services. This was an earlier issue. Illinois has by far the largest units of government in the state of Illinois. And as you have your populations decline in some of the smaller towns, then that property tax burden for all these units of government has to be borne by fewer people. So as a result, we have to do some things to try to figure out how to stem those property tax burdens. And one of them we did a couple of years ago was to decrease or remove unnecessary unfunded state mandates. I did a survey of about we had responses from about 500 state agencies and suggesting things that were outdated state mandates. For example, that you had to now keep your records on microfiche. Well, I'm not sure if microfiche still exists, but that was still a mandate. So we got rid of a bunch of those things, and I think that's what we ended up doing with that was we created it's on your list of further reading, but we created a manual to where people can go through and do a couple of exercises and try to figure out what kind of collaboration is possible. What can you do to streamline local governments? It's not necessarily mergers, but it's collaboration, other kind of activities. So that might be worth looking at. And Main Street as a social center, and Main Street program was mentioned earlier, has an excellent opportunity there. But I'm thinking of Main Street now, not so much in strictly businesses as much as more of a social place for the community. I think is kind of important. And then the age-friendly housing, so we can free up some housing for newcomers. And if you haven't looked at it lately, Ben Winchester has some excellent examples and some programs on how to do those kinds of activities. And next slide, please. So what comes next? And I firmly believe that it's the local actions that are going to make this happen. And I think that, as I mentioned at the beginning, I think we have really great opportunities, but making those opportunities into trends is going to be on us. And so it's going to be us that's going to make it happen. So this is more of a traditional kind of strategic doing kind of thing that you might take a look at. You're probably familiar with it already, but you form your local interest groups. I think we've lost our slide for a second. You jump back. There you go. You form the interest groups to assess the assets, determine is it a welcoming community, that was mentioned earlier. You have representative age groups, well networked. You publicize the findings to build, I've got a mistake on the build, a typo, sorry. Build, organize, or overall support. And then you organize what I like to use with communities as a strategic doing, namely what could we do, what should we do, what will we do, and do we have the networks to do it? And then what are our targets? And then what are the expectations with completion times? And then when are we going to meet next to evaluate our progress? And then the third step, of course, is to arrange the funding that ends up as that surface as the most viable. And the most viable typically mean, to me, the high impact at low cost. And the next slide, please. These are just some further readings that if you want to take a look at, just what you need, something else to read, I suppose. But it's I've cited Steve and some of his work on the fourth wave, which I really believe we are entering. I think that's an excellent piece. Tessa Conroy's stuff and Sarah Lowe with the entrepreneurship, I think is very, very important to take a look at. Some of the things that I've done, the rural areas and transition is talking a little bit about the kind of activities that we talked here in this presentation. The guidebook I mentioned earlier, and the modernizing local government delivery systems I mentioned earlier. So that's the end of my presentation. I really appreciate your attention, and thanks for inviting me.
Thank you so much, Dr. Walzer. We do have a few minutes if there are some questions that folks would like to ask of our presenter. And so I'll pause just a second. You can either drop it in the chat or feel free to unmute and ask directly. To get it started, Norm, I have a question. We are working with a few different communities across the state. And one of the issues that continually comes up is, making sure that we have leaders taking the reins of local decisions and activities that are occurring, and the challenge of volunteerism. And you had mentioned this as part of your presentation, and it was also led to a variety of comments in the chat. Could you just speak a little bit more from your research and studies, some of how to overcome some of the barriers to supporting volunteerism and encouraging a new wave of folks, either newcomers to the community or younger generations, or even those who have been in the community that just have never been asked how to increase participation in the community to support the activities in our rural places?
I think that's probably one of the biggest challenges. What I saw in Vermont was it was usually 2 or 3 people that recognized the need and for whatever reason stepped forward to do it. And we had some roundtable discussions and stuff, you know, in individual stores and stuff. And the pattern seemed to be that you recognized, let's say you needed a grocery store, which was probably everybody recognized, but nobody necessarily was bringing it to the surface. But you brought that to the surface, and then you basically found 3 or 4 people in the community who were accepted leaders, people who had credibility. And then, you know, people would say, well, gee, if he or she is interested in doing this, yeah, it makes sense to me. It's probably not going to backfire. And then it kind of filtered out from there. And I think people who hadn't been involved in things before stepped forward. I don't know that there's a surefire way to actually sort of have a class to create volunteers of older people in the community. But I think the volunteers are really looking for networks, or the older people, particularly the ones that, and I've done some interviews in some of the communities, but the issue seems to come up that they're not really plugged in, that maybe the traditional organizations like the Elks or the KSEs or something else have kind of faded away in terms of dwindling memberships. And the new social organizations, and Ben Winchester can suggest some really good stuff on this. The new generation tends to do things that are not necessarily organized in the same way. And they tend to be kind of under the radar, but they're out there. And so there's a lot of activities going on, but they aren't necessarily the traditional kind of things that maybe the older folks who now have the time and the resources, you know, are plugged into. So not a good answer, but that's kind of the perception that I have at the moment of it's some way to somehow get that transition between the older traditional organizations and the newer startup groups that are coming in and building that bridge in some way to bring up the volunteers in.
Right. Thank you. Michael Darger did have a question for you. To what extent are these examples transferring businesses as a going concern versus the biz stops and the community restarts in a different configuration? I don't know if you want to clarify that, Michael.
Yeah, I don't quite understand the question.
Oh, okay. So Norm, does the business have to die and it's not there, and then the community's coming in and, you know, pulling it out of the grave, or some of them transferred before they die as going concerns?
No, the ones that I've seen, and the ones that I mentioned, Red Tire and Evergreen in Montana, I think they were pretty much the businesses had indicated they're going to close, and they may not have physically locked the door yet, but it was very clear that the business was on the way out. So I don't think, if I understand your question correctly, I don't think the business has to be closed, but I think it was that they were willing to work with the businesses, particularly in Kansas, the Red Tire approach, because they were really trying to help the business to make it so that it was more marketable. And then they have a website and various things, and you can log into the website. And if you're interested maybe in buying a business or something like that, and you can figure out what's going on. But the purpose in both of them was really to kind of rebuild a business or to revitalize it or to keep it going, you know, whatever phase it was in at that point.
Great. We do have time for just one more question. If someone would like to ask a question or make a closing remark. I know 3 hours is a long time, and I appreciate everyone taking the time to be here with us. So And I'm not hearing any takers. So with that, I will move to the closing remarks. So I would like to thank all of our presenters and for sharing their time and their information with us today. It's been very enlightening. And moving forward, it really is important that we continue to prioritize the needs of rural communities, not only in Wisconsin, but across the country, and invest in initiatives that support their economic development. We also must recognize the unique challenges faced by rural communities and work to address these issues through innovative solutions and partnerships. Overall, this summit has been an opportunity to come together and explore the data relevant to rural Wisconsin and to discuss ways to strengthen the rural economy in the state. Again, I want to thank everyone for joining us today for this year's summit. We truly appreciate you spending your morning with us. And as I mentioned at the beginning of the webinar or the summit, we will be following up with additional information, so you can access all PowerPoint presentations, all resources that were shared, and then also the recording on our website. You will receive a follow-up email when all of that is ready. With that, thank you, and I hope you have a wonderful day. Take care.